But the recent development of Islamic finance actually started in 1963 in Egypt, whereby a small microfinance bank felt the need to establish an alternative non-interest financial system for their clients, Nasser Islamic Bank in Egypt. So when it started that practice, it has been successful, but it didn't last long. Then other countries have started to learn, such as Sudan, Dubai, and an Islamic Development Bank came in 1970. So this is the recent development. And scholars started to write. Before the practice, actually, there was some theoretical development about what is this system. You got scholars, Muslim scholars who studied finance, economics at PhD level. They were concerned about solving the problems of not only Muslims, but solving the problem of humanity because of the inherent features, weaknesses in capitalism. Because capitalism becomes the major system, as you know, after the colonialism, most of the countries were affected by the neo-colonialism, imperialism, and all these things. So, but then again, this alternative becomes a kind of, theoretically, at that time, they were able to show that if you can follow this, it will salvage you, it will give you the economic freedom, and it will assist your people to overcome your challenges.
The main thing about the essence of financial literacy from the Islamic finance world is for people to understand that there is an alternative for them. They need to be aware that there is something called Islamic finance. And what it does is that it gives them an opportunity to manage their financial needs, get access to financial resources, and also achieve their financial goals, all in line with their beliefs, all in line with the ethical beliefs and the directives of the Sharia, which is the guiding principle for Muslims.
Do we see potential? The answer is yes. But is it easily achievable? And I would say there is a lot of ways, and there is a lot of methods where we saw other countries that they were able to grow their Islamic finance industry in different models.
Increasing capital flow will be participation of capital market operators in the Islamic finance, broaden that space, encouraging financial inclusion and the likes. That is the role that Islamic finance can play in stabilizing the economy.
It's not one company solving everything. It is a collaboration between the different Nigerian ecosystem, talented youths and startups, that this is where we can go global together.
Good morning, our guests from Nigeria. Good afternoon and good evening from other parts of the world. And thank you for joining this webinar. My name is Bukola-Akinyele, the anchor of the Islamic Finance Weekly, and your host today this webinar. Kindly let us know the location you are joining us from. Good to have you all here. On behalf of the board and management team of Proshare and WebTV, I welcome our speakers and participants joining us in Nigeria and abroad. I'm delighted to welcome you to the maiden edition of the Islamic Finance Webinar titled Islamic Finance and the Nigerian Capital Market. The evolution of the non-interest financial market in Nigeria since 2011 has witnessed remarkable growth and expansion in the development of ethical products and services. However, a rich Fitch Ratings report shows that the Islamic finance industry in Nigeria is still in its early stage for development, with a large potential for growth. Against this background, WebTV entered the Islamic Finance Weekly Program, the first and only dedicated non-interest finance online TV program in Nigeria, to document the development in the non-interest financial market and enlightening the public on the various opportunities. To further the conversation, Islamic Finance Weekly introduced this webinar series to enable the individuals to learn more and ask questions directly from experts within the ecosystem, while preferring recommendations to foster increased growth within the ecosystem. Between 2017 to 2020, Nigeria issued 3 sukuk bonds to support infrastructure development in the country to the tune of 62 billion naira. This was oversubscribed, showing the wide acceptance amongst ethically minded retail and institutional investors. Apart from this, the nation currently has 2 licensed non-interest finance banks, 4 takaful companies, 2 non-interest banking windows, several microfinance banks, and the asset management funds. Nigeria has been described as a potential strategic hub for Islamic finance in Africa, and the prospects are bright with the development of the 2015 to 2025 Capital Market Master Plan by the Securities and Exchange Commission, Nigeria. According to the Master Plan, the target is to ensure that non-interest finance contributes 25% to the overall capital market capitalization in Nigeria. This is an audacious and bold step towards an opportunity to broaden the scope of Islamic finance in the Nigerian capital market. Islamic finance by design provides alternative financing measures for ethical investment and serve as a tool for deepening financial inclusion. The big question is, what are the opportunities and requirements to achieve a 25% non-interest finance capitalization by 2025 in Nigeria? The quest to understand this informed this maiden WebTV Islamic Finance Weekly webinar focused on the theme Islamic Finance and the Nigerian Capital Market, to enlighten corporate entities, investors, and individuals about the opportunities in non-interest finance market, and identify the constraints to the growth of the non-interest finance market and how the challenges can be addressed. To do justice to the various topics identified for this webinar, had the keynote speaker for this event, Mr. Abdulkadir, Abbas, Head of Department, Securities and Investment Services, SEC, Nigeria. He will be speaking on Islamic finance, Nigeria capital market, and the opportunities for growth, as well as other seasoned experts and analysts that will present on key focus areas and address critical questions about the theme. Namely, we have Mrs. Toyin Sonny, CEO, Emerging Africa Capital Group, and Chairperson, SEC Financial Literacy Technical Committee. Mr. Nubadalizan Abdurrahman, CEO of Third Bank, the second non-interest bank in Nigeria. We have Mrs. Adaeze Uzor-Kalu, Head External Relations FMDQ Group. We also have Mr. Akeem Oyewale, the Chief Executive Officer of Marble Capital Limited. We have Mrs. Oluwafunto Olashi, Vice President, Financial Market, AFEX, and Ndako Mujindadi, Head Investment and Research, Lotus Capital Limited. Before I hand over to the keynote speaker and then the moderator, I'm excited to let you know that we'll be giving away 5,000 naira each to 2 participants here today to invest in an Islamic finance product after this webinar. All you have to do to win this is to fill the form drop in chat now and wait till the end of the webinar to know if you are the lucky winner and the product you have won. In addition, take note the following webinar guidelines. If your Zoom volume is too low, kindly check your system volume. The webinar is being recorded and live streamed on the WebTV YouTube channel. To comment and have discussions, use the chat icon. Submit your questions via the Q&A icon. Only this will be answered during the question and answer session. Thank you once again for joining us, and to our speakers and sponsors, Proshare, WebTV, and NASPAT Faith Society. We appreciate you for contributing your time and resources to make this a reality. At this junction, I now hand over to the moderator to coordinate the discussant segment.
Thank you so much, Mrs. Bukola-Akinyele, for having us all, hosting us on WebTV. We've always been following your interesting works, you and the team, with regards to Islamic Finance Weekly. Now, I would like to just go straight ahead and initiate the panel discussion. However, we have our keynote speaker on board. We have him around. So I'll just check if Mr. Abbas is ready and available. And so we just kickstart with a keynote from him. As a matter of introduction, yes,
okay,
Dr.
you now have Mr. Abdulkadir here.
Okay.
You now have the keynote, Mr. Abdulkadir.
That's great. Then over to you, Mrs. Bukola-Akinyele.
I think it is really a privilege for us from the SEC to be invited to participate in this webinar. We would like to commend the organizers, WebTV, Proshare, and NASPAT for this for organizing this event. As a matter of fact, it is actually part of what we are doing at the SEC, because as you remember, we are certainly with two responsibilities: developing the market and regulating the market. So, as part of our market development effort, initiative like this is part of what the SEC has been doing all this while. So, I have some slides that I wanted to share with the audience, just to provoke some discussion. On behalf of the DG, I want to really thank you for giving us this audience. The DG actually wanted to be here, but he has other commitments, and that is why he asked me to attend on his behalf. So, just some few presentations as part of the keynote address that I wanted to share with you. Islamic Finance and the Nigerian Capital Market. Okay, now, according to the IFB, that is Islamic Financial Services Board, this is their report for 2020, where it states the growth in terms of the Islamic financial segment of the market. That Islamic finance industry asset grew by 11.4% in 2019. That is around 2.4 trillion USD from 2.1 trillion in 2018. And you see the growth is actually fueled by increase in scope issuances, which is one of the key instruments issued in the market or on the Islamic capital market segment. Now, in our own context, the Nigerian Islamic finance sector continued to really grow because there are a lot of interest and enthusiasm shown by both conventional investors and the new investors that are actually averse to investing in conventional instruments. And you can see the pattern of growth in terms of how the universe, the Nigerian Islamic finance actually transversed. So we can see the journey that we started, and this is actually from the SEC perspective. The SEC actually joined a committee in 2004. This is an ESCO committee was coming up with a framework on Islamic capital market products. And this is really the starting point of our journey as the SEC. And you can see the trend. From 2004, we started having an in-house committee that we need to see how we can develop this segment of the market. 2008, we have some few Islamic mutual funds that came into being. I think the first one was the Lotus fund that was actually launched in 2008. And this one even came before we even came up with the rules on Islam, Islamic quality investment scheme. It was actually in 2010 that we now realized there is need to come up with this framework. Now, in 2012, you all recall what happened in terms of the development of an Islamic index that tracked certain Islamic Sharia compliant equities, for instance. And it was actually developed by Lotus Capital. Now, the 2013, I can say that was really when the SEC actually realized, in addition to the framework in Islamic fund management, we need to come up with regulation with respect to scope issuance. And that now allowed for the first sub-national scope, which is also the scope that we approved. This is the first scope that was filed with the SEC and approved by the SEC in 2013. But before we do that, what happened? We actually have to come up with the framework for the scope to be issued. Now, look at the project, and I think really this is very interesting. This now shows us a lot of things. As at that time, we now realize that really there is really demand for this product because that offer was actually oversubscribed. And that is what shows that there's a really interest in that kind of instrument. And you can see, because it is actually asset-based, you know, they raise this money and they build schools. And these schools that were built were now leased out to Osun State. Osun State became the lessee in that respect. Now, when we realize that there is really, you know, an interest, and in line with our developmental role at the CC, in 2015, we now came up with the 10-year master plan, as you are all aware. And part of that 10-year master plan was to actually come up with certain segment on how to promote, you know, non-interest capital market products. So we have such objective with regard to that. We give ourselves a very ambitious target at trying to achieve 5% of the overall market capitalization by 2025 through introduction or deepening of Islamic capital market products. So essentially, the strategic objective on the Islamic on the non-interest capital market products focus on 4 pillars. One is to build a strong regulatory foundation for the non-interest capital market products and to encourage development of the product and the stakeholders as well. And then to now make Nigeria to be a regional hub in terms of Islamic finance. And I think we have a good story to tell. Now, in terms of strategic initiatives, now we have in the master plan embedded certain key initiatives that would now help us to achieve that. And we started with even the SEC. We tried to see how we can build our own internal capacity, that is the institutional capacity. And then we try to see how we can now collaborate with us, you know, regulators to see how we can define these sectors. And I think we can see, you know, in a bit, how that collaboration assisted us, even in terms of issuances, even the sovereign issuance. It was because of the collaboration that we had with DMO that DMO now issue the first sovereign scope in 2017. Now, regulatory authorities to engage on a continuous basis and to see how we can be able to have a robust public awareness. And that is why I say this kind of program is really a program that we really would like to always partner with the organizers, because it is part of what we can do to really defend our own market, to see how we can create alternatives in our own market so that it will be a win-win situation, and so that we can be able to really achieve that idea of being a regional hub when it comes to Islamic finance. So ensuring availability of no-interest capital market product, because we have the very first products, and even the operators, we have very few operators that are really operating in this space. So how do you now ensure, or how do you now support other operators to now see the need to come into this market to really play in that respect? Now, promoting or enhancing cross-border listing is part of what we have put as initiative towards achieving this milestone in 2025, because we are looking at how we can be able to now encourage issuers to come into our own show to do this issuance. In addition to that, we are trying to see how we can even encourage other supranational bodies, the likes of AFDVs, IFCs, to come into the market to play by issuing scope in our own market. Now, trying to see how, I'm just trying to give this a lowdown as like a kind that we will now provide some conversation. So what have we achieved? So because somebody will ask, all this while from 2015 when we started implementing this master plan, what have we achieved? And this is just the summary of what some of the key achievements that we did, we had over time. And the master plan is still a continuous process. Now, in terms of engagement with stakeholders, we have had engagement with can come, and it will lead to the release of this guideline that we have been anticipating, guideline on 6, and which is almost at the last stage of conclusion. In addition to that, we try to engage other regulatory bodies like the central bank, and they have issued a guideline on liquidity status on no-interest product, especially scope, so that it will now be, we are trying to create a level playing field with the conventional instrument. So that liquidity status for scope has already been issued by the central bank. Now, in addition to that, in STC, as part of our own strategy to now harmonize our own framework, we had a rule on Islamic fund management in 2010. Then we now in 2013 had a rule on scope. So there are Sharia governance issues. So what we try to do is now harmonize those governance issues so that you can now be, it will be seamless. Whether you are doing a fund management or you are issuing scope, in terms of Sharia governance model, we are trying to see how we can now adopt a similar, the same model in that respect. So it is an ongoing exercise for fine-tuning or trying to see how we can harmonize the rule in terms of Sharia governance. Now, in terms of providing tax clarity and trying to create level playing field, our engagement with the Inland Revenue authorities, has led to a draft framework which has already been circulated to the market and is about to be finalized now on tax treatment. And what are we trying to do? What we are trying to achieve here is to create a kind of tax neutrality. So if you are issuing scope, for instance, and you are issuing a conventional bond, the same tax treatment should be accorded in that respect. That is what we are trying to do here. And we have had very good collaboration with the tax authorities. As I said earlier, trying to see how we can now deepen the market further. Our collaboration with GMO and CBN is still ongoing, trying to see how we can have short-term liquidity, Sharia liquidity instruments, apart from the sovereign scope that GMO have issued. Then facilitation of operation commodities, I think we have done that. And then partnering with other stakeholders in promoting investor education is part of what we are doing, in addition to all the engagement that we have had before. And we are still having, planned engagement, to see how we can really engage further. And the way we are looking at this engagement this time around, we are targeting specific sectors. We are looking at how you can target the issuers, the stakeholders, and other market operators. Then in terms of issuance, based on the master plan, we were tasked as part of the initiative to see how we can encourage issuance by subnational. This is an ongoing exercise as well. Then I talk about the issuance of the sovereign issue, because why do we really need sovereign issue? When we started with Oshun, our preference was actually to have the sovereign first, so that you can have the yield curve and the benchmark, so that other corporates and other subnational can ride on. Then in terms of listing rules, we have approved listing rules of the exchanges. So that one is actually something that we have done. So in a nutshell, these are some of the achievements I can say based on the implementation of the master plan that we have already achieved. And I think there are a lot of things that we are still implementing that is ongoing. Now, in terms of growth of the market, we try to see how we encourage even risks, no-interest risks to come into play. And I'm happy to announce that we have application for a program which we're trying to encourage, so that we can have a kind of avalanche of products in the market that investors can be able to have choice on. Now, what are these opportunities? And how do you really galvanize the market to achieve these opportunities? Now, you all agree with me that we are the biggest economy. Our GDP is estimated to be about around $400 billion, for instance. Now we have the population, and the population. Some of the investing public in Nigeria are averse to investing in this conventional instrument. So what do you do as a regulator? Why can't we find a way to create an alternative, so that you can be able to have a market of choice? You can have avalanche of products, and you can be able to have a lot of investors coming into play. And this will really enhance the financial inclusion that we're talking about. Now, currently we have deficit in infrastructure, everybody knows. And one of the instruments that we're trying to showcase, especially the scope, is one of the veritable instruments that you can actually use to finance infrastructure. And we have demonstrated it from the Oshun issuers. And we're trying to encourage more and more issuers to see the need of issuing scope in that respect. Now, even some of the investors that are really averse to investing in other alternative in conventional can be able to really take advantage of the market to come and invest. Once we have avalanche of products that are really Sharia compliant, then the COVID pandemic has actually given us another opportunity. Opportunity in the sense that you can be able to see that some social responsible investment can be done, as a result of the pandemic. The issue about green bond. Why can't we have green school, for instance? We can have green school, and the principle of green bond is really similar to the conventional, to the scoop issuance. So you can be able to see how you can mimic that one to be able to achieve an end in that regard. Now, so in conclusion, ladies and gentlemen, what are we really looking at? We agree that yes, the non-interest segment of the market, whether it is money market, capital market, or the chakafu, is still nascent. So how do we really see, what do we do, or what do you need to put in place to really see how we can deepen this market? So I call it continue, embrace, and develop. And what do you mean by continue? Continue to collaborate with market stakeholders to introduce regulation, to create that level playing field so that all participants can be able to now be on board. Now, still continue to foster partnership. This capacity building that we're talking about, I think it is something that should be continuous. Of recent, we have collaboration with IFSD towards capacity building, and we even invited market players. The whole idea is to see how we can really develop a market of choice. Then embrace digitalization to support innovative products, so that we have a rule on crowdfunding, and we are saying that you can leverage on crowdfunding to facilitate Islamic financing through SMEs, and then of course continue to develop the market, create transparency, and make it efficient, so that even other issuers can be able to come. Why can't the likes of our big corporate blue chips come with a program? You can do conventional issuance and you can do scoop at the same time. You can have a win-win situation in that case, because the whole idea is to see how you can really deepen your market. It's not really, people have that conception about, look, this is for a special, for a certain sect. I think Islamic finance is not really for certain sect. It is actually often for even fund managers that want to diversify their portfolio. They can use it, they can leverage on that. So it is really an opportunity for us as a market to see how we can really make a market of choice. I thank you for listening, and I think we can have some conversation along that. Thank you very much.
Thank you very much, Mr. Abdulkadir Abbas. Thank you so much for taking us through the Islamic capital market development and growth in Nigeria, the opportunity for investment in the market. That was a very insightful presentation for me. So right now we are moving on to the next segment, which is the discussants and audience engagement this morning. So the person to coordinate this session is none other than our moderator for this webinar, Dr. Ishaq Akinlaso.
Thank you. Good morning and good evening, everyone, depending on where you are. I suppose people are joining us from outside Nigeria, be they Nigerians or be they friends or enthusiasts for the Nigerian market. Would like to really appreciate Mr. Abdulkadir for such a wonderful keynote. He has really highlighted several interesting points about the role or the efforts of Nigerian regulatory bodies with regards to development of Islamic capital market, or the non-interest capital market as it's called in Nigeria. He has highlighted quite interestingly that the journey actually started nearly 2 decades ago in 2004, where they started with the introduction of framework for the development of Islamic finance. And only 9 years after that time do we see the first action from first Islamic finance action, real action, with the issuance of the sovereign sukuk. And he did mention that that actually was part of a strategy that has been outlined. They would like to have first a sovereign sukuk before the other party or corporate or retail jump in the game. So to have a benchmark for sukuk issuances, or would I say Islamic finance capital market outlay. That is interesting, and that is really wonderful. Thank you so much again, Mr. Abdulkadir. There's so much to unpack from the keynote, but time would not permit us. Hopefully, we'll come back to you with the questions, both from the panelists as well as the members of the audience who are participating today. So moving forward, allow me to really reintroduce myself. I'm Dr. Ishaq Mustapha of the International Center for Education in Islamic Finance, INCEF in Malaysia. And I work with Taj Bank. Now, for those who may not know or who are not in Nigeria at the moment, Taj Bank is the second largest non-interest bank in Nigeria. And be it as it may, it's a bank that prides itself as a bank whose only interest is you the consumer, you the retailer, you the banker, you the SMEs or corporate bodies. It's a bank that is there for you. However, I'm really not here to represent Taj Bank. I'm here to moderate the interaction of our distinguished Islamic finance thought leaders, whom I shall be introducing very briefly, and as well to moderate the interaction between you as an audience and together to ensure that we are able to explore the theme of the day, Islamic finance and capital markets in Nigeria. Now, to cut straight and expound on the exploration, I'm really glad to welcome our array of distinguished speakers who are representatives of various industry players within the Nigerian Islamic finance market, or would I say the Nigerian financial market at large. These are key players, these are key opinion leaders as it's called. But besides that, we also have Mr. Nurfadli Zan Abdurrahman, the CEO of Taj Bank. As I mentioned, Taj Bank is the second bank, non-interest bank in Nigeria, who also will not be here to join us, but he is well and ably represented by Mr. Tesleem Akosile. Mr. Tesleem Akosile is known for his years of experience, nearly a decade, in law practice and finance in Nigeria, and he is currently the team lead risk, Sharia non-compliance risk and product development at Taj Bank. And beside this wonderful speaker, we also have Mrs. Uzor-Kalu, who is the head external relations at FMDQ. She has more than 20 years experience as private and public across areas of private and public sectors in Nigeria's financial market. Mrs. Adaeze, Mrs. Uzor-Kalu, we shall come to her in due course. Next, we have Mr. Akeem Oyewale, and this actually will come across very interesting. Mr. Akeem Oyewale has more than 2 decades experience in both capital market and investment banking. And he is the CEO, the Chief Executive Officer of Maiden Capital Limited, who is also a new but fast-growing capital market player in Nigeria. And we have also with us Mrs. Oluwasemo, or I'd rather put it very simply, Oluwafunto Oluwasemo, the Vice President, Financial Market AFEX. She has nearly a decade experience in delivering financial services solutions to both medium and large enterprises. And really a major play is within the Nigerian territory. And lastly, save the best for the last, they say, Mr. Ndako Mujindadi. He is the head of investment and risk Lotus Capital. From the key man have been among pioneer players in the capital market in Nigeria. And he has also a decade experience in finance at various capacity. And that would really serve as an introduction of our key speakers and guests for today. Now, to cut straight point, I would like to keep things tidy and enjoyable. So first, I shall invite the panelists to share a mix of perspective on the theme. First of all, as a form of an opening remark. It's going to be short, sweet, in 7 minutes. However, so in that case, after then, we will have a stimulating discussion among the panelists, and to make the interaction much more interesting, we'll open the floor for members of the audience to participate. However, members of the audience will only participate by way of posing questions or suggestions or commentary in the Q&A column. I shall flag that up. That will be my responsibility. You're not here really to listen to me, but more to listen to our distinguished guests in the house. So to begin, I shall invite Mr. Tesleem to open the discussion on Islamic banking and capital market in Nigeria. But just before he takes the floor, I'd like to invite you all the participants, to take a quick poll, which will be displayed on your screen very shortly. In fact, if it's not there already as I speak. The results of this poll matter for the discussion, because at the end of the discussion, we'd like the speaker to comment on the result of the poll. We just want to know your thoughts generally about the theme that we're discussing about, Islamic finance and capital market in Nigeria. So without further ado, shall I invite Mr. Tesleem to take on the floor and enlighten us. Thank you very much.
Many thanks, Dr. Mustapha, for having me. I stand instead of my MD, who is unavoidably absent for this session. When we look at Islamic banking and capital market, or so to say, Islamic capital market, as the case may be, we come to realize the fact that there is a lot more synergy that can be done by these two subsectors of Islamic finance. Islamic finance has a lot of sectors, subsectors: banking, capital markets, takaful, welfare, among others. So when it comes to the business arm of the Islamic economic system, the Islamic banking subsector and the Islamic capital market or wealth management subsector, as the case may be, have a lot more of synergy to do. By so doing, the Islamic finance industry will be further deepened, especially in the area of liquidity management and engendering Islamic finance ecosystem. We are all aware of the pioneer Islamic bank having problem of profitability, which arose out of paucity of avenue to manage, or paucity of mechanisms and avenue to manage their liquidity. So by these two subsectors actively together and engaging, we will have a situation where liquidity management is furthered and the ecosystem is further enhanced. In addition to that is the fact that these two subsectors can do a lot of collaboration in the area of wealth management for the high net worth individuals, among blue chip companies, among other entities or counterparties. That is not to say the fact that there are no ongoing synergy. In fact, and indeed, there are ongoing synergy, not only among the non-interest banks, that is Islamic banks and asset management or capital market players, but even with the takaful firms, the professional bodies or capacity enhancement bodies, among other fringe players in the Islamic economic space within Nigeria. Further on this is that the private security can do a lot to energize our economy. By the time these funds are pooled, and it has a way of furthering the entrepreneurial development of youths who are enterprising and who are looking up to funds to further their entrepreneurial skills. Further on this, on the importance of the synergy between these several subsectors is it becomes more important and more significant in view of the upcoming Fund 6 by the Pension Commission. By the time this Fund 6 becomes fully operational, then that is going to lend credence to the need for all of these subsectors to synergize and collaborate in engendering a robust Islamic finance ecosystem within Nigeria.
Okay, thank you so much, Mr. Tesleem. That's quite a short and really nice remark from you there, connecting both banking, Islamic banking, or as it's called locally in Mexico, where I communicated yesterday, the non-interest banking as well as the non-interest capital market, highlighting the synergy between both markets, which sort of creates investment opportunity for the average consumer. That is really interesting. The couple of questions actually for you, Mr. Tesleem. However, we will save that till the Q&A session. So just before I'd like to really highlight here that every member of the audience is invited and encouraged to participate in the poll. This result of the poll shall be shared later on, and it shall be a ground for further discussion. But that's not all. I would also like to invite those who might be interested in the giveaway investment to just on the chat box an instruction on how to register for those giveaway. Two giveaway, one from Lotus Halal Fixed Income Fund, the other from Marble Fixed Income Investments. These are giveaway for participants. I could participate, but then I'm a moderator participant. So for some reason, I've been excluded. Nevertheless, I hope you guys enjoy it on your own. So moving forward, I invite Mrs. Uzor-Kalu to come and shed some light, give her own remark from her own industry perspective with regards to the theme of discussion today, Islamic finance and Islam and capital markets in Nigeria. Mrs. Adaeze, over to you if you could hear me.
Thank you, Dr. Mustapha. So I'd like to share my screen. I don't know if I have the rights to share.
Yes, you do.
Thank you very much.
Yes, we can.
Kindly let me. Thank you very much. Okay, so thank you first of all for inviting us to participate in this webinar, Proshare and WebTV. My CEO is committed with other activities and unfortunately can't be here, so I'm here to represent the Chief Executive Officer of FMDQ Group, Mr. Bola Onadele Koko. So our role is just to discuss about the Islamic finance and the Nigerian capital market, and I won't bore you too much with details of the sukuk, but I'm going to start with the Islamic finance, in general. Now, the concept and the tenets of Islamic finance is about funding the real sector. Okay, so Islamic finance is finance that is specifically in line with Islamic law, and also to ensure that whatever is prohibited within the law are not in the structuring of Islamic debts or Islamic finance. For the prohibitions, we just talk about riba, for example, with interest element. There's gara, which is about ambiguity in contracts. Haram, which is financing whatever is dangerous, like alcohol, tobacco. And then we have mesa, or let's say speculation or gambling. So these are prohibited elements in Islamic law. And so when you're structuring a transaction, you want to ensure that these elements are not in within that transaction or in the project. So you have various contracts that are permissible, but I'll highlight a few of them that are familiar or that are, I'll say, more common. And we have the profit and loss sharing concept. We have joint venture, which is Musharaka. Forgive me for my wrong pronunciations. We have Ijara, which is leasing, and we have Istisna, which is advanced payment sale that can be used for, let's say, for housing finance. So according to Islamic Finance Development Report, the total Islamic finance assets is about 2.88 trillion so far. And there's obviously a forecast for growth in this, with this act. We have Islamic spending forecasted to 2024 to be about 2.4 trillion. This is what analysts are expecting using the CAGR growth rate. Currently, Islamic spending is geared towards media creation, modest fashion, cosmetics, pharmaceuticals, and obviously Muslim-friendly travel. And that is estimated at 2.2 trillion recently. Okay, so I won't bore you too much with evolution, but just to mention that conventional Islamic finance actually started prior to 1970s. So in 1963, we had the Might Bank in Egypt in 1963. But then we moved on to Islamic development banks, which came out in Saudi Arabia and Dubai, and we had products for Islamic banking products in that region. Towards the 1980s, we had the introduction of Takaful, which is the Islamic insurance, and we had Islamic investments, we had commercial banks, other products coming out from there, and then we had the expansion into the Asia Pacific in the 1980s. Towards the 1990s, we had the Islamic Bank in Bangladesh, and then also in Pakistan also, and we had more institutions coming on board with asset management companies, broker-dealer companies, in conjunction with the Takaful growing as well, and more commercial banks coming to market. The products also increased over time, and again, these were also mentioned. The polls for me. Products also increased over time with Islamic bonds, Sharia compliant stocks, and Islamic stockbroking. Towards the 2000s, we also now have, in Nigeria, we have Taj Bank, we have Stanbic. In the 1992s, we also had Bank PHB, if you'll recall, that's no more in existence. But we now had obviously more growth in Takaful, more growth in mutual funds, Sharia compliant stocks as well. And then we also now saw the growth into Europe, America, and also Africa. So bringing this home to Sukuk and to where I think we're more comfortable, fixed income and Sukuk. Sukuk is an ownership of certificate, and this is for the benefit of the participants who may not know what Sukuk is. It's an ownership of certificate in an asset, and it's a tangible asset. Unlike conventional bonds where you don't prove any ownership, you just have a bond certificate. With this, it's really an alternative to conventional bonds. And also the Sukuk is in line with what is permissible under the Sharia law. Now, what are the benefits of Sukuk? And so why would we even post Sukuk to stakeholders or to potential investors? Sukuk is not just open to the Islamic community, to the Islamic brethren. It's also open to non-Islamic religions. So it's open to all. Sukuk is one asset or one alternative investment type that can actually address the budget deficit, if any, and also finance infrastructure, which is one thing that Nigeria needs. It supports the growth of Islamic finance. It also deepens the capital market. So looking at the global Sukuk space and saying, okay, so who are the companies or where are the countries that are actually leading in Sukuk? We have Malaysia that's leading, we have Bahrain, we have Qatar, we have Indonesia, we have Saudi Arabia, we have a lot of other countries. Global Sukuk is estimated to reach 715 billion in Q1 2021, and there's just so much more room for growth. We had the Formosa Sukuk or Taiwan, whereby you can actually issue Sukuk in other currencies other than Taiwan dollar. So there are innovations coming in terms of the Sukuk and alignment with other ESG principles or other products like green bonds. And this is just deepening and growing this market. If we look at the use of proceeds and say, okay, where are these funds being channeled towards? We have a lot of money or funds going towards the energy sector, renewable energy, low carbon buildings, waste, lands, infrastructure, and transportation. Bringing this home to Africa, we looked at the international market. We see what Saudi Arabia, the UAE, what they've done in terms of Sukuk issuances. Bringing this home to the African continent, we have Morocco, who actually issued new legislation to support Islamic finance, and the $116 million bond in Sukuk bond in 2018 was actually channeled towards renewable energy. We also have a Sukuk issuance, sovereign Sukuk issuance in Senegal. We had in Cote d'Ivoire in 2016, 150 billion. We have Nigeria. The central bank has supported with the Financial Regulatory Advisory Council of experts that are supporting and ensuring Islamic banking products conform with Islamic laws, and also ensuring under the FSRCC, there's also the advisory body that ensures the collaboration between the SEC, the DMO, and the CBN and other regulators. And then this has also given birth to 3 sovereign Sukuks and 1 subnational, which is the Osun State Sukuk bond. Again, these are the pillars that are just driving growth in Africa, driving financial inclusion, driving more economic activities, deepening the market, and obviously addressing infrastructure funding. Same goes for Egypt, Tunisia, Kenya, Uganda, South Africa, and even Ghana has just also gotten on the onto Sukuk issuances as well. Looking at the Sukuk element in conjunction with the I'll say ethical funding and Sukuk element is 2.9% of the outstanding sovereign bonds. So out of all the sovereign bonds, 2.9% of that is the Sukuk element. And as we know, in Nigeria, we have over 50% of the population of Muslims. And so that just gives us a good opportunity for more Sukuk issuances in Nigeria. And yes, within the Nigerian space, we have 2 fledged Islamic banks. We have Taj Bank, we have Jais Bank, we also have Islamic IBTC. And we also have other funds like Lotus Halal Equity Fund, Lotus Halal Fixed Income Fund, FBN Quest Asset Management also have launched, they launched the Halal Fund in 2020. United Capital Asset Management Limited debuted also a Sukuk fund in 2020 as well. Obviously, Fitch, also according to them, the Sukuk issuance represents the largest segment in the Nigerian Islamic finance market. So there's a lot of room for opportunity in the Nigerian region. Now, sovereign Sukuk is about 362 billion. We had, like I mentioned before, the Osun State bond is about 11.4 billion. We also have a private placement that was actually just recently coming to market, about 1 billion. This is a green Sukuk, which is the first of its kind. And we have the DFI by AFC, which is 150 million Sukuk issuance. And this is just showing a dashboard market in Nigeria. And you can see that it's quite a small number. It's less than 1%. And so there's room for opportunity, room for growth, room for more development in this sector. So looking at the enabling environment in terms of what are the stakeholders, the government and regulatory stakeholders doing in terms of creating that environment for more issuances, for more development, for more growth of the Sukuk instrument. Reviewing the capital market master plan. But even at that, with the initial master plan, you do have the Sukuk element, and the objective of that is for more inclusion, which FMDQ also developed their capital market project 2025 on the back of this. The SEC also issued the regulation for Sukuk in 2013. The pension fund operators, and therefore their regulators and for investable assets, they also have the Fund 6 out of the multi-fund structure, which is purely for non-interest finance for the RSA account holders. Then we also have the CBN established, like I mentioned, the phrase that I mentioned, they established the phrase, which is the Financial Regulatory Advisory of Experts. And this is, again, is to support issuances and certify products and ensure these products are in line with Sukuk. Now, Bofia Act also has a Sukuk element to it, and obviously the Investment and Securities Act, like I mentioned, also ensuring that there's inclusion and there's a Sukuk element to the revised bill. So how has FMDQ sort of supported this, the development of the Sukuk market? Now, in 2015, as most people may know, FMDQ is an agent of change financial market infrastructure. And one thing that is very close to our heart is ensuring the development of the capital market and inclusion of all types of fixed income initiatives that can drive the development of the capital market and the growth of the development of the capital market. So FMDQ in 2015 organized a workshop in collaboration with IFC, supported by the SEC, and this workshop was the implementation of the Debt Capital Market Project 2025. In 2016, FMDQ supported the SEC with the stakeholder engagement, and this is not interest against the government's national issue in Nigeria. FMDQ Exchange welcomed the Maiden sovereign 100 billion Sukuk, and also developed Sukuk listing rules in 2017. And there's another conference that was actually executed in 2017, to market conference, again with the Sukuk element at that conference. In 2019, FMDQ executed another Debt Capital Market Conference and also welcomed the second Sukuk on the exchange. 2020, we received 162 billion sovereign Sukuk on our exchange, and also in 2021, we developed FMDQ private companies noting guidelines. So this is to encourage companies that are not PLCs to access. Now let's take this to the modern market. So one of the successes of Sukuk, and with this, if you remember in 2004, the Malaysian GDP stood at $25 billion. 10 years after that, it was over $300 billion. And what really drove this was the Sukuk issuances in Islamic finance. The government is determined in ensuring that they focus on market education and also focus on developing their economy via Sukuk, via Islamic finance, also kinds of Islamic finance. Malaysia established International Finance Center for the International Islamic Finance Center in 2006 through collaborative efforts with their central bank and the SEC. They also established several academic institutions and to drive market education and strengthen even those from even the youth, and strengthen a lot of market players in how to structure Sukuk instruments. And this is again to develop their market. One key interesting success in the Malaysian market was the introduction of an active secondary market, which is very important for liquidity. And you can actually issue Sukuks in Ringgit or non-Ringgit transaction, which is current local currency or foreign currency. So they've welcomed and really opened this to a lot of opportunity and a lot of growth. One key area is the sustainable responsible investment, again, which is in line, very much in line with the ESG investment, or I'll say green bond investment, or sustainable finance. And so one thing that Malaysia is driving recently is sustainable and responsible investments in collaboration with Islamic finance, and that is just to grow the economy. So looking at the percentage of outstanding Sukuk, you can see from the dashboard that conventional bonds are actually declining over the years, and you see the more issuances of Sukuks. And I think they've seen the light. They've seen that this is more of a safe haven. They've seen this as more compelling, because if the world had actually adopted or embraced Sukuk way earlier, the global financial crisis of 2008 probably wouldn't have happened, number one, and number two, a lot of economies wouldn't have been blighted by that situation. So you can see that a lot of government issuances, a lot of government bonds are Sukuks, quasi-government bonds are Sukuks, and also corporate bonds are also Sukuk. There's room for more asset-backed securities, and there's room for obviously pipeline of transactions from different banks coming together and issuing or refinancing finances for their clients. So looking at the Saudi Arabia market, the Saudi Arabia market is another success story for Sukuk issuances. And one key aspect, or one key thing that comes to mind here is the primary dealer scheme for Saudi Arabia. And this is a local currency where 5 banks actually can buy a Sukuk instrument from the government and on sale through a two-way quote to other investors. And this is just to widen the investor base. A lot of the Saudi Arabia Sukuks, which is huge, they had 12 billion in a space of over 2-3 years in 2014. But the use of proceeds, all the Sukuk types are Ijara, you have a lot of Mudaraba, a lot of hybrid instruments, a lot of Istisna instruments, and these are all going towards development of Saudi Arabia. So for the GCC countries, Saudi Arabia is leading in terms of Sukuk issuances. Okay, so what are the lessons learned? And so from looking at the model markets and looking at what they've done, one thing that we can learn in Nigeria and actually adopt in Nigeria and imbibe in Nigeria is the need for standardization, need for a standardized and robust regulatory framework. And the SEC have done quite a lot in championing this and in ensuring we have the rules, and also FMDQ. Another marketplace like the CBN, they've done quite a lot with ensuring that they have the enabling environment for Sukuk issuances to thrive. There's a need for more market issuances, so we need more Islamic products or more Islamic friendly products, commercial papers, more bonds, and again, more awareness, more market education, more workshops to happen. I think it's very critical also to have capacity even within the capital market intermediaries. It's very crucial that Islamic finance, is right in the face of people so that they understand the benefits of it. And also the people understand, it can be demystified, you can disabuse the minds of investors. They'll understand that this is not just for Islamic or the Muslim community, but also for the non-Muslim community. I think one thing that is critical is enhanced liquidity. So enhanced liquidity through a two-way quote system. And I think you have that platform for that to happen. But again, we need more market education and we need more awareness. One thing that is critical now is, now that we have a lot of ESG principles or ESG financing or sustainable financing coming to the market, it's very critical for us to align Islamic finance with ESG principles because they're very similar. As far as you don't have the haram element, you don't have the riba element. And we ensure that those who are knowledgeable in issuances can support in ensuring that every stage of the transaction, that we're ticking all the boxes. And I think with that, there'll be more room for growth. And I think Nigerian state can continue to grow using Islamic finance. Thank you very much.
Wow. Massive presentation there. Thank you so very much, Mrs. Uzor-Kalu of FMDQ, walking us through really the Islamic finance development, but particularly from the Sukuk market side. And at the same time, giving us statistics both locally and internationally. It helps us compare with the rest of the world for us to know better where we stand. And it's also interesting to note the journey of the FMDQ in supporting Islamic finance market development since 2015, with workshops in partnership with the IFC as well as the Securities and Exchange Commission. One thing that I really appreciate in this, in the thoughts that she has shared, is adopting a model market. So identifying Malaysia, for instance, as a model market, which truly, globally, it's known to be a hub for Sukuk issuances and offtake globally, with a very, very active secondary market. And based on their own progress, developed a path for Nigeria. And as been highlighted by Mr. Abdulkadir in the keynote, and further re-emphasized by Mrs. Uzor-Kalu, it's up to the market regulators and players to work towards enhancing sensitization and awareness about Islamic finance on the one hand. And on the other hand, it's also up to the consumers, the enthusiasts of Islamic finance, to understand or to look at Islamic finance beyond the religious sense. So to move from the realm of looking at things just through the religious viewpoint, but into the economic sense, to make a balance between the two. And perhaps, if I may add, with the climate change concern that is happening in the world today, with the unprecedented disruption of COVID-19, we might also want to consider sustainability sense in the mix. And with that, again, I thank very much Mrs. Uzor-Kalu from FMDQ. We will come back, a couple of questions coming up on the thoughts that you have just shared with us, and a couple of questions also from the audience that have been highlighted. I just want to please request the audience, type in your questions. We are seeing them as the discussion is going on, and I'm sure the speakers, the panelists are also viewing this question, so they'll prepare an answer that hopefully will satisfy your quest for understanding in a clear sense. So without further ado, I shall proceed to invite the next speaker, Mr. Akeem, the Chief Executive Officer of Marble Capital Limited. Mr. Akeem, the floor is yours.
Thank you very much, Dr. Mustapha, and thanks to the Proshare team, WebTV team, for inviting me to make this short presentation. I hope I'm quite audible. So I'll just proceed in order to save some time. I would like to share my screen, if that is okay.
You're most welcome.
Okay, good. Thank you very much. I'm going to be speaking very, very quickly about the opportunities in the market, especially from an Islamic capital market perspective. Very short, and I'd like to thank what Adaeze has done so far, and Mr. Abbas. I think they've done a good work in actually setting the pace and giving us a platform to continue this conversation. Now, to go straight to the point, there are many opportunities that are available for investors that are interested in Islamic capital markets. I'm just going to speak to a few of them. The most common one, which a lot of people have spoken to and people continue to speak about, are the sukuks. The sukuks has been defined by Adaeze, essentially represents an opportunity to own a piece of a certificate in an asset, for investors. That's
pardon me, Mr. Akeem, if you could hear me, your audio is a bit on the low side. Would like you to speak a little louder so our audience can actually enjoy what you.
Okay, cool. Let me try and do that. Yeah. Is it better now, please? Hello, Mustapha, is it better now?
Yes, it is. It is a lot better.
Okay, good. Thank you. So I'm going to speak to the very few products that are available in the Islamic capital market, and that are also products that the Nigerian market actually provide or are seeking to provide, to investors in the Islamic capital market. The most common one are the sukuks. And the sukuks essentially represent part ownership in an asset from an Islamic perspective for any investor. As much as possible, Islamic asset management tries to make investors to invest in tangible assets. And like Adaeze mentioned, if a lot of investments were actually in Islamic capital market, the crisis we had during the GFC, the global financial crisis, would not have been as intense as it was. And as we saw during that period, most of the entities in the Middle East, they actually either came out relatively unscathed or just very few challenges. So Islamic capital market gives you an opportunity to have investments that also allows you, to be sure that your investments are represented by tangible assets most of the time. And the sukuk is a very, very simple or most common way of representing that. It's like the conventional bond, but it does more than the conventional bond in that it is usually either asset-backed or asset-based. You also have equities. And just like Mr. Abbas said earlier, we have our forebear in the Islamic capital markets in Nigeria, that's Lotus Capital, who actually broke the ground by introducing the Lotus Halal funds, and also the Lotus Islamic Index, that were listed on the Nigerian Stock Exchange. What that did and what it has done so far is to allow investors in Islamic capital markets in Nigeria to be able to actually have investment in halal compliant stocks. So you have a lot of Sharia experts that have analyzed all the stocks in Nigeria, and they've been able to tell us which of these stocks are halal compliant, and that gives us the opportunity to actually invest in only halal compliant equities. And we've seen, over the last 10 years, if you just do a regression analysis of the performances of halal stocks with the non-halal stock, that you've actually not lost anything. In actual fact, the halal stocks have actually performed much better in terms of dividend yield, in terms of actual appreciation than the relatively non-halal stocks. And this is obvious for everyone to see. Another aspect of Islamic capital market products that are available, but which few of us are actually taking advantage of, are the commodities. Today, even though we have 5 commodity exchanges in Nigeria, we have 2 that are quite vibrant, of which at the moment you have AFEX that is the most vibrant at the moment, and you have a lot of commodities. Now, by virtue of them being assets, these commodities are usually halal compliant. Though you still need an Islamic expert to help you review this, but you find it very easy and you can go to bed when you invest in some of these commodities. We need investors to be aware that those opportunities exist, and that they can actually take advantage of that by just investing in some of the securities on the FS Commodity Exchange or on the LCFE. You have mutual funds as well. You have Islamic mutual funds. Abbas mentioned earlier that you have commodities. You have mutual funds like the Stanbic IBTC Sharia Compliance Fund, the Sharia Fixed Income Fund. You have the United Capital Sukuk Fund that was just launched. You have the Lotus funds as well. And you have a couple of private funds as well that are Islamic mutual funds. I mean, what mutual funds by their nature is that they allow you to be able to invest a small amount of money, but allows you to have diversified asset classes. So you can invest with 5,000 Naira, with 10,000 Naira, and be able to hold assets in about 3 or 4 Islamic equities, for example, if it's an Islamic equity mutual fund. Same thing goes for the Islamic fixed income funds as well. With a small amount of money, the fund manager will be able to spread your funds, towards a couple of Islamically compliant fixed income securities. You have Islamic unit trusts, which are similar to mutual funds as well, but they could be milestone funds. They could be milestone targets where you can use it to plan for your Hajj. You can use it to plan for your marriage. You can use it to plan for your next mortgage or house that you are intending to acquire, or buy over time. Then you have the exchange traded funds. We do not have any exchange traded fund that is Islamic as yet in Nigeria. Similarly, we do not yet have Islamic derivatives. I would hasten to add, though, that for Islamic derivatives, that is still a bit arguable, but they are coming up in a number of industries, and I'm sure Nigeria is just a matter of time before we're able to introduce Islamic derivatives as well. I've mentioned and I've tried to explain about Sukuk. I'm not going to spend much time here, given the fact that Adaeze has spoken extensively on this. But what we've seen in Nigeria is that we've seen the sub-national Sukuk of Osun State, that was issued in 2013, that was fully paid last year. It was oversubscribed. We've seen the 3 national Sukuks, fully oversubscribed when they were issued, and we've seen that investors are now getting to know that Sukuks are not just for Muslims. So Islamic investments are not just for Muslims, they're for anybody that are interested in ethical Islamic investments. And Sukuks have actually demonstrated that fairly in Nigeria. We've also seen, in the last few years, like I mentioned earlier, Islamic equities, a number of companies as well that are listed on the exchange are also trying to raise funds, either as private investments or as public investments that are also Islamic. So you don't see only Islamic sukuks that are public, but we are seeing a couple of private investments as well that are also aligned with Islamic laws, the law of the Sharia, the law of the Muamalat as well. And this is giving a lot of opportunities to investors to diversify their holdings from conventional investment to also Islamic investment. We've seen, as Abbas mentioned and as Adaeze mentioned as well, the Nigerian Capital Market Master Plan has a very ambitious target of having 25% of all the instruments in Nigeria by 2025 to be Islamic. Now, what does that mean? The objective of the SEC is to expand the frontiers of investments, to give a lot of opportunities and options to investors in our market. However, if you compare the current volume of sukuks in the market today and what they should be in the next 4 years, we still have a long way to go. And that also means a lot of opportunities as well for a number of investors. And for that, we've seen one of the innovative players in the market actually coming out, even though via a private issuance, to actually take advantage of the desire of Nigerians to actually participate in Islamic capital market. We've seen the first green sukuk in Africa that was just closed, by a private company. We saw investors actually participating in it, even though it's a digital company. And what they are looking forward to is good returns that is also compliant with the rules of the Sharia. And we've all seen this slide that has explained the movement, the growth of Islamic finance, Islamic capital markets in Nigeria from 2011 to date. What we can only project and what we are seeing from 2021 going forward is that the rise and the development of Islamic capital markets might actually be in a geometric fashion. And for this, we are just expecting investors to please speak more to your fund managers, speak more to the regulators. There is so much being done by the FMDQ, by the NGX to enhance liquidity in the market, to ensure that more products are introduced that allow compliance. A lot of capacity building is being done. People should be on the lookout. This session is one of them. And as much as possible, we are expecting investors to continue to ask questions. Please ask questions. You have registered and approved fund managers by the SEC that are available, like Marble Capital. We can speak to you, we can advise you and guide you in how to make your investments in a way that will be allow compliance and contribute towards the growth of the Islamic capital market. Thank you very much. I would like to stop here.
Oh, wonderful there. Thank you so much, Mr. Akeem. He has walked us through the investment opportunity in the Islamic capital market as far as Nigeria is concerned. There are questions for you, and I really hope you be available to oblige us on those. I'm not sure if I'm connected. Am I audible?
You are. I can hear you.
Okay, wonderful. Your screen is still on the share.
Yeah, I've done that.
Okay, wonderful. Thank you. Now I can see it clearly. So yes, we've highlighted the opportunities and the product, the instruments with which investors can actually take benefit and maximize or say chase return in Islamic capital market or non-interest capital market in Nigeria. And Marble Capital would be a vehicle for that, I suppose, alongside other players. Just in the interest of time, I would also still again want to reiterate that the poll is on. It's a continuous process. We'll be having a couple of them. There are maybe 3 or 2 more left to go. So we encourage you all to participate. And for those who are also looking to grab the opportunity, the giveaway that has been handed over, one by Lotus Capital and the other by Marble Capital, giveaway for investment in either of these financial institutions, to look through the chat box and fill up the form. They'll be guided from there. Without further ado, shall I invite Oluwafunto Oluwasemo, forgive the pronunciation of the name, the Vice President Financial Market at AFEX, to come shed some light to the discussion that we're having. And really, she shall be focusing on, just a moment. Okay, she shall be focusing on, okay.
I can hear me.
Okay. Yes, hello. Yes, you're on board. Please carry on.
Well, thank you very much, and wonderful presentation by all the panelists so far. More than half of what I intend to speak to has been touched in one way or the other by the various speakers ahead of me. But quickly, what I want to do in 5 minutes or possibly is to see the correlation between Islamic finance and commodities and the commodities market, particularly opportunities that are available to both institutional and retail investors who are very particular about ethical investments. And again, just as it's been said previously, not just the people of the Islamic faith, but everyone that is looking at impact, that is looking at the ethical part of their investment. So permit me to quickly just run through this. So AFEX Exchange, our vision is to be the reference point for commodities trading in Africa. And we started our journey about 6 years ago to build a framework for commodities trading and exchange in Nigeria. We're currently regulated by SEC and licensed by SEC. To understand how Islamic finance and the commodities market work together, a quick overview of our ecosystem. Our ecosystem, sorry, the screen just blocked me. Our ecosystem comprises of the entire value chain of the commodities trading and commodities production. Again, if you look at commodities trading, particularly with respect to Islamic finance or the ethical part, you realize that one of the key characteristics of Islamic finance, ethical investment require that the investment vehicle must be asset backed. Now, for you to be able to participate in the commodities exchange, it then means that there needs to be some sort of production of the commodity that is being listed or that is being invested in on the exchange. And so we have a very wide base of agro producers, or what you could call smallholder farmers. At the moment, we have registered and aggregated over 200,000 smallholder farmers, and we've provided them with financial inputs. And these are set of people that ordinarily, prior to the existence of AFEX, they have been disconnected from financial services and access to financing. And then we are also very strong in terms of the investors. We currently have over 16,000 investors on our platform that trade on ethical-based instruments on the exchange. And in terms of the volume of commodities that has been traded on the exchange, we're potentially looking at over 200,000 metric tons. If I take it to Naira value, we'll be looking at about 50 billion Naira in value. And these are the commodities that have been facilitated by the exchange. Again, it's one thing for you to have commodities that have been produced, but it's also another thing for you to have the framework that brings together both the producers of the commodity as well as the users of the commodity and all the other intermediaries that play within that value chain. So what we have done with our platform is to create one infrastructure. Currently, we have over 70 warehouses across 19 states, and that is growing. The essence of these warehouses is to create a way where you can securitize the asset-backed nature of the contracts that are being traded. And then these asset-backed commodities are then converted into electronic warehouse receipts that are then made available for investors to participate in. Again, we have over 70 warehouses across 19 states, and that infrastructure network is constantly growing. The infrastructure also provides the opportunity for the producers of the commodity to be able to warehouse and store the produce of their farm or the produce of their work, so that we can minimize the post-harvest losses, which again has the impact of increasing the profitability of the farmers, increasing food supply chain, and overall increasing the impact of food security in Nigeria. We also have created a marketplace. So statistics shows that 4 in every commodity producers have limited access to potential offtake and buyers. So what our platform or what our ecosystem has provided is to create a marketplace where the producers of the commodity can be matched with the buyers of the commodity, so that they can exchange to the produce of their farm at fair value. Again, fairness and transparency are core to Islamic financing. So we create that platform that the farmers or the producers of commodity are not exploited, and they get a fair value for the work that they do in the production value chain. And again, capital is also very key. And this is talking about impact and access to financing to smallholder farmers that currently live below the poverty level. Our ability to match the commodity ecosystem and the financial ecosystem creates a way to unlock funding for the underfinanced agro-values chain and the underfinanced commodity market space. So that as we are able to unlock more financing, productivity and profitability of the producers of the commodity is significantly improved. And there's also the overall impact on the economy, where we are able to do better in terms of economic performance. Again, how do we at AFEX see the opportunity of the universe? And this is pretty much coming from our experience, 6 years experience in the market, working on backward integration with the farmers, working with capital market operators to design products that can become available to investors. And may I say that as of today, we have about 5 broad product categories. And on the average, under every product categories, about 20 to 30% of them are structured in ethical way. And we usually have 100% subscription of that portion of our finance. Again, this speaks to what one of the speakers had mentioned, that we could create ethical variants of the traditional investment vehicle. So we currently do that at AFEX and make that opportunity available for the ethically inclined investor. So we have opportunities in the trade finance. If we look at how Nigeria is currently produced, we are key exporters of premium commodities around the globe. So you consider commodities like cocoa, you consider commodities like cashew, you consider commodities like sesame. As a matter of fact, Nigeria actually has one of the best quality, when it comes to quality of cashew around the globe. And the majority of our cashew actually goes to Vietnam. So there's a huge opportunity for trade finance. And if we look at statistics as at end of December, end of last year, our export pretty much grew to over 300 billion naira. And this is just scratching the surface because we have not fully unlocked the opportunity that the agro value chain, and again, this is just the agro value chain. There are other non-oil sector that we can, non-oil sector commodities that we can leverage on to increase the potential for trade financing. We also talked about working capital. At the moment, there is a working capital gap of about 2 trillion naira for agro processors across various subsectors, starting from the fertilizer blending, which provide the core input to smallholder farmers, to animal feed production. We all are experiencing the unprecedented high prices of poultry products, whether it's the chicken or it's the egg. And this is just due to that financing gap that we have within the work, the financing gap that we have in the working capital, which is not allowing the agro processors to be able to procure effectively and optimize their production. Again, there's a huge working capital financing need in rice milling. We are still a net importer of rice as at today. And then also, if we look at the food and beverage and subsector, there's also a huge significant working capital gap and we can potentially structure ethical finance to unlock those opportunities and then deliver fair value to everyone involved in that value chain. There's also production finance. Again, this is always super critical when you talk about commodities trading, at least at the stage where we are in commodities trading in Nigeria. Again, if you look at commodities trading in Nigeria or in the African in the sub-Saharan African region, except with the commodities market in South Africa, commodities trading and commodities market in Africa and in Nigeria are still at the level of delivery of physicals, or they are still tied to the physicals, unlike the other advanced commodities markets where they've moved beyond delivery of physicals to derivative and other structured financial instruments. Again, for us to be able to grow our capability as an exchange or grow the opportunity that commodities investment offers or alternative assets, there's also the need to look at, there's a huge opportunity in the production value chain, vis-a-vis providing credit or access to loan or financing in form of input to the producers of the commodity. There's also provided a market space where the producers of commodity can have a say, can determine what price, a fair value for what the produce of their work would be, rather than then being at the mercies of middlemen that will pretty much take on the profits, and then there is no fair exchange of value across the value chain. There is, again, commodities trading. So this pretty much mimic how the performance of the equity market, but this time around, you are having commodity as the underlying asset, and it is providing as alternative asset class to investors, whether institutional or retail. Again, if we look at the investment landscape in the last few years, there's been an increasing demand for alternative asset class, whether it's in the real estate or is in the commodity space. So that increase in demand is also a sign for an opportunity for fund managers, for financial institutions to say, how can we create commodity-backed instruments as alternative assets to investors who are looking at impact, who are looking at ethical investment, pretty much. Again, if we look at what alternative asset class, this data is considering the transaction that has gone on the AFEX Commodities Exchange in the last 3 years, right? Conservatively, commodities trading has delivered about 36% return on investment to investors on our market in the last 3 years. So how do people participate in commodities trading on our exchange? Again, as I mentioned, we have dimensioned our product into 5 core areas. One is the spot contracts. And just to mention again, or to reiterate, that all contracts or all investments on our exchange are asset-backed, and so which makes it qualify for ethical investment or ethical financing. So we have the spot trade, which is pretty much securitizing your physical means and making that contract available on the exchange for whoever wants to participate. So someone that wants to invest in maize, for instance, does not need to leave Lagos to go to Kaduna or Zaria or to go to any part of the world, but they can on the platform buy into this contract and then exit. There's usually a time horizon for this. And the beautiful thing, at least at the stage that we're in when it comes to agro commodities in Nigeria, is the fact that it's kind of because for most of the commodities, right, it's a single season. So there's usually an entry at a recommended entry points where harvests happens, and a lot of this commodity are available at the floor prices. And that recommended entry time is between November and January. And then depending on what your investment or return target is, you can exit anytime up until between May and July or prior to that. But usually there's usually a season reset beyond July. And again, for us, we can say that you can hold your contract for as long as economically viable, but it's just that we recommend an entry and an exit date. We also have the trade finance, in which you can choose to finance an aggregator that has an offtake contract, so that it can aggregate the commodity, deliver to the offtaker, and then at an agreed rate and tenor, pay back what has been invested for the aggregation back to the investor. We have the asset-backed commercial paper, which pretty much provide and unlock low cost of working capital to agro processors. And it's as commodity as the underlying security for the instruments. And last year, we raised the first ever asset-backed commercial paper in Nigeria and in West Africa, and that we were able to raise 25 billion naira from the capital market. Again, the potential for asset-backed commercial paper is huge. And what we are looking at as a platform play is how do we get more fund managers, more issuing houses, take on agro processors that have credibility, and then pretty much raise issuance of asset-backed commercial paper on their behalf, make it available and listed on the exchange for whoever is interested in asset-backed investments. We also have what we call the exchange-traded commodity. This is kind of similar to the exchange-traded fund, again, and also similar to the spot contracts. This time around, the difference between the spot contract and the exchange-traded commodity is the fact that rather than an investor deciding on which individual commodity to invest in, there is a basket of commodities that has been put together, and the average price is determined based on the value of that underlying commodity and made available. So investors can take advantage on the weighted average return on investment of the underlying assets. And last but not the least, we have the input finance notes, which again unlocks financing for smallholder farmers who are at the center of production of agro-commodities in Nigeria. So just to add, there's one more, which Akeem actually mentioned in his presentation, which is derivative. We're working on that, and again, in light of compliance with the Sharia rules and guidelines. And very soon, and we're also following the global trend to see how we can adapt derivatives to fit Sharia compliant products. So again, quick understanding of finance and how we tie together Islamic finance and the commodity. So we look at three broad characteristics from the Islamic financing perspective, and then tie them to how we create and structure our products. So again, as I mentioned, all instruments listed and traded on our exchange are asset-backed. So it fulfills that characteristic of Islamic financing. There's also impact. Every of our investment or products has an impact element or an ethical element to it. There's a risk sharing, which everybody involved in the value chain gets a fair value of whatever that transaction is. Just quickly say, how then do we marry as commodity markets and service asset-backed asset products and Islamic finance? We do that through our Wakala-based instrument. So the Wakala-based instrument is pretty much a principal and agent kind of arrangement in which the principal would appoint the agent called the Wakil, and he is then given instruction on how to invest. He's given a fixed amount and an agreed return or profit is agreed with the investor. And pretty much the agent brings his expertise to invest the fund in Sharia compliant asset that has been agreed upon between the principal and the agent. In structuring our Wakala-based products and tying it to commodity, our target is looking at the fact that it is asset-backed and it has an impact feature of the Islamic finance product. Underlying assets that our Wakala-based instrument would typically finance include fertilizers, maize, sorghum, soybean, paddy rice. And we also have what the risk profile. So a lot of times people that take part in the Wakala-based instrument are people that have low to medium risk appetite, in which all they just want to guarantee is an agreed return or agreed profits. And that product is pretty much suited for such risk profile investors. And again, just as I mentioned, the return is moderate return. We also have our Murabaha-based instrument. This is structured on the back of cost plus nature of Islamic financing. This look at the impact and the risk sharing of Islamic financing. The core asset that backs this is largely fertilizers and agro inputs that are provided to the investors, to the producers of commodities. And the way these work is that the structure provides agri-based input like fertilizers, seedlings, and other chemicals required by the farmers to produce at a cost, and then the farmer pretty much pay back that cost or loan with the commodity that they produce from their farm, and the difference is just a premium or a cost plus over what has been lended to them in form of inputs. Risk profile, this is a higher risk instrument than the Wakala. And again, when you look at the return on investment matches the level of risk that this kind of structure carries. And last but not the least is the trade-based instrument. So we have people that are that's their risk level, or they are not conservative when it comes to taking on investment. Again, on the back of our spot contracts, you can trade individual contracts of maize, sorghum, or any of the focus crops listed on the exchange. The target is pretty much that it is asset backed and there's a risk sharing feature. Just as I mentioned, this is high risk for anyone who has a very high appetite, who has an appetite for high risk based instruments. Return on investment, the upside can be very interesting, and the upside is sometimes unlimited, depending on, again, your entry and exit time horizon. A very classic example is for most of the commodities, whether maize, sorghum, or soybean, are done season to date, average of 60 to 70% return on investment. That will be all. Thank you very much for your time.
Okay, thank you very much, Mrs. Oluwasemo. So I'll yield the floor to the last speaker, Mr. Ndako from Lotus Capital, to give his presentation. Mr. Ndako, are you there?
Yes, I am. Thank you very much.
Okay.
Just to be sure that you can hear me.
Yes, I can.
Okay, great. So thank you so much for giving me the opportunity to make the presentation. I'll just share my screen. You can let me know once it's visible, please. Okay. You just confirm that you can see my screen?
Yes, we can.
All right, great. So I'll keep it short and simple. Thank you so much to the Proshare team for putting together this fantastic panel. I really appreciate all the conversations or presentations that we had so far. It's been very detailed and covered a lot of ground, especially around things that have happened in the market and how robust the market environment is as at today. I'm taking a slightly different angle for my presentation. I'd like to speak to us as investors to say, okay, we've heard this, the fantastic presentation so far. So how exactly do we participate in the market? As in, what kind of products, can we engage with? And what kind of strategy should we have in engaging with these products? Okay, right. So first, I think it's important to mention that as much as we say non-interest finance, as much as we use some terminologies when we're speaking about non-interest finance, such as the likes of Ijara, Musharaka, Mudaraba, and their likes, it's important to understand that these instruments or these contracts or this Islamic finance features will come to you as an investor in the form of traditional assets. So what you'll be looking at as an investor is to see an equity that has been screened, or to see a bond that is compliant with Islamic finance principles, or to see commodities like Funto mentioned, and things like this. So this is the kind of assets that you're going to see. You're not going to go to markets and just see something. It will be things that you're familiar with. There will be a certain level of due diligence that you will need to go through to ascertain that you can participate in these type of investments. Now, one central point that I think is also important to share is that as ethical investors, as non-interest or Islamic investors, we follow a particular maxim, which is to say that everything is permissible unless we can establish that it is not permissible. Now, what that means is if you enter into the market, you're have access to a wide variety of investable assets. Unless it can be proven that those things are not permissible to you, you can engage with them. And one thing to look at is, for instance, real estate or even commodities. By their very nature, some of these things, are compliant, unless, it can be proving otherwise. So for us at Lotus Capital, we try and make sure that we can present or assist the market in developing in a way that the investor has access to a broad range of assets that can allow them, express the traditional investment perspectives. We like to think of Sharia compliance as the cornerstone for investing. And this can be any other consideration for people who are, have other considerations. So it can be something broader like ethical finance. It can be something like ESG, impact investing. But then whatever is your unique circumstance, you should consider that, when engaging with products in the markets. However, this is not the only consideration that we have in investing. And I think it's also important to mention in this forum, assuming, we're all speaking to investors, as the other things that we should also look at in addition to Sharia compliance when we're engaging with instruments. For market-based instruments, it's important to note that many of these instruments are likely to be regulated. So you want to be comfortable that either the institution that you're dealing with or the instruments that you're investing in have the regular or required regulatory oversight, and they're investable for you. Other things such as returns should be critical. We've given examples of just the kind of returns that are possible with non-interest investing. You should be comfortable that those returns, are also good for you when you're engaging with non-interest products. You should also, I'm very happy that Funto spoke to this, you should also be comfortable with the risk profile of the investment. And the risk profile is in different, it can be in form of volatility in realizing your returns. It can be in form of Sharia compliance. To be sure that when you invest in an asset or invest in any product or through any marketplace, whatever you're invested in remains compliant. Other things around liquidity are quite key. In our market, liquidity is a big consideration. You want to be able to enter an investment and come out when you'd like. You want to be sure that the time frame any so while we're here speaking about Islamic finance, we must understand that as investors, we would interact with this with a rational mindset. We would have a screen for non-interest finance, but we'll still need to see good regulatory compliance. We'll need to see good returns. We'll need to see profile, and be sure that we can engage with this based on our for our investment horizon. Now, if we take a lens to hone in equities, speaking to the topic of investing through indices, for instance, one way of engaging with equities as an Islamic investor or as a non-interest investor is to determine how exactly you want to go about doing this. You have some time to go through the instruments that are in the market and begin to identify those that are compliant. Or would you want somebody to do this for you and just point you in the right direction? Okay. And even if that person points you in the right direction, would you want continuous guidance on things that are compliant? Or would you want to be able to do the due diligence on a case-by-case basis on your own? Now, we call this a disparity between active investing and passive investing. At Lotus, what we've done is to try and make sure we have products that are useful for investors, regardless of how they want to interact with the market or regardless of how they want to interact with equity investment. Now, if you wanted to interact with equity investment from the point of view where you're an active investor, all you need to do is follow a particular methodology in identifying those assets. Now, there are two levels. One is to make sure that the company is not involved in any way in areas that are deemed to be not permissible with non-interest finance principles. Such areas we've already spoken about, things like alcohol or water, interest, conventional insurance and whatnot. You get this out of the way, and then you look at what's left in the basket of investable assets, equities, that is, that you can invest in. Then secondly, you need to now look through the companies one by one, making sure that their financial performance or rather their finances are managed in a way that is convenient for a non-interest investor to invest in, or permissible for a non-interest investor to invest in. And that's what we call our quantitative screening. Now, this is a bit of a process. So what we've done is to say, look, we've done the screening for you. via the Lotus Islamic Index in collaboration with the Nigerian Stock Exchange. This has been available since about 2012. And then we've built a product on the back of that, which is an exchange-traded fund to allow investors coming to pre-screened equities and trade on that and generate whatever kind of returns or risk profile that they like, right? This is one way as a non-interest investor, as an ethical investor, that you can engage with equity investments. You might ask me, so what kind of investments should I be looking at within the equity space? If we do this screening today, there are certain companies that would pop out, and they're names that you'll be familiar with, right? So when we say be an Islamic investor, a non-interest investor, engage with the market, their equities, they're this, you might wonder what equities are we speaking about? They're names that you're familiar with, very large cap companies such as the likes of MTN, as at today, Dangote Cement, you name it, Nestle, Cadbury, and what have you. Now, in terms of the size, the amount of investment that is possible within the equity space, one metric that we like to use is the market capitalization, which is the amount of shares that have been issued by these companies. Now, for companies that have been screened, that are investable, as of today, you have about 11 trillion worth of market capitalization. Not all that amount will be available on any given day, but that gives you the idea of the scope of investment that is possible for non-interest investors within the equity space. It's also important to note that there are many things that go into investing in equities. Considerations for what makes a company compliant. It's not only, like I mentioned in my previous slide, companies that are not invested in or engaged in non-permissible business. There are other things that we need to look at to make sure that they are compliant. And compliance, or share compliance, is not a static position. I might have a product, or I might have an equity or any kind of investment that is certified as compliant today. It might not be compliant tomorrow. So you need to be sure that ongoing, these products, are compliant. And what we say is that the pass and fail list for equities, it changes, right? So there are some companies that are investable today. These companies might not be investable tomorrow, or there are companies that were investable previously that are not currently on the slide. That speaks to equity investment. If we look at the fixed income side, I wouldn't dwell necessarily a lot on this because we've had enough speakers that have spoken on it. But the area that I would like to look at for the Sukuk investment, the fixed income investment, is from the perspective of the investor again. So we've seen, a lot of investment has gone into, or a lot of work has gone into building the framework for Sukuk. A lot of work has gone in terms of, say, the regulators, the exchanges, even the advisors, such as ourselves, in bringing products to market. Now, after that has been done, after a lot has been done, how exactly do investors interact with these instruments? What are the motivations for interacting with these instruments? We have found that in addition to share compliance, a broad category of investors are attracted to Sukuk in particular for various reasons. Some people like it because of the ability for diversification. Retail investors in particular seem to like it because of the amount of social impact that it can have by being linked to infrastructure, just because of the type of Sukuk that we brought to market so far in Nigeria. That social impact has been very well emphasized and has a very strong appeal to retail investors and has encouraged them to participate in this market. And I think understanding the rationales of investors is critical because we can structure products. But if we don't take everything into consideration, the whole bucket of considerations, you may not achieve a desirable level of capital formation, which is required to achieve all the things that we're saying in the non-interest capital market master plan. Because at the end of the day, you have the products, but the products need to bring people into market. So it has to be embedded with all the considerations that people have for these kind of instruments. We've seen things like the level of risk that is in the Sukuk, as one of the drivers for investment. We've seen things around the liquidity and our need to ensure that we have listing of products, rules for listing of products, the CBN giving liquidity status for this product, just to enhance the issuance, okay? So it's not just about the issuance being structured in a particular way. For the likes of pension funds, for instance, as far back as 2017, it was critical that the National Pension Commission included in the wording of regulation that sukuk was an allowable instrument for PFAs, right? It was important that the wording spelling, exchange traded funds or non-interest exchange traded funds was explicit, by regulators, because these are very rigid regulatory environments. So for us as practitioners, while considering Sharia compliance of products, we must make sure that we consider broader objectives of you, the investor. So I think I would like you to take it away that the products that we're presenting to you, or the products that the market is coming up with, are not just only compliant in nature, but they are designed to meet multiple needs. And there's so many things. If we look at what is possible with sukuk in particular from the infrastructure perspective, we only scratched the surface of what sukuk can do. I'm giving an example here of just how far sukuk has gone in building real estate in countries such as Dubai, right? And some of us might have visited places like this, and you'd be amazed that financing was mobilized for such astounding developments, in various places. And you'd also be amazed that financing from sukuk has been used for very impactful social endeavors. In the case of now, COVID and the likes, it's important to note that sukuk has been used for things like vaccination, right? So whilst we're building products, we need to target them in such a way that the appeal will be even stronger and participation will be much, much deeper. I'd like to speak to one way of how this capital formation can be formed. So people can go on and invest in equities. They can go on and invest in sukuk. But not everybody can start picking both sukuk or equities or commodities or whatnot. They might need to invest via a pooled investment scheme. Okay? And these pooled investment schemes in Nigeria have started growing quite rapidly. In the graph that you'll see on my screen, you'd see that we were growing quite modestly up until 2019. In 2020, right, we had a massive increase in the value or the amount of assets that were accumulated in pooled investment schemes. Now, these are pooled investment schemes that are registered by the SEC as non-interest, right? We're looking at about 35 billion in terms of asset side as at the end of 2020. Now, into this year, we're well ahead of 40 billion. Now, why is this? Now, it is because there are investors that want to come into the market on any given day where they may not have access to a particular sukuk or equity. They might not have the skill set to pick any of these investments, not know when to enter or exit the market, and they're looking for expert management. And so because of that, they come in through pooled investment schemes. They may want a fixed income fund, they may want a balanced fund, they may want an equity fund, they may want to invest in real estate, right? But they want to do this through a vehicle, a registered vehicle, a proper vehicle. And so what we've done is to make sure that we have products that cut across all these type of asset classes or investment preferences. We have a mixed fund, we have a fixed income fund, an equity fund. We've advised on a real estate investment fund, and things like this. So this is another way that investors can engage in the market. Okay, so I think in terms of all the things that are possible, investors need to understand that these products are quite robust. They can access them in the market. They're available in the market. There is room for the creation of additional products, definitely, in the likes of sukuk, money market funds, even more companies being listed, infrastructure funds, private equity funds, more mutual funds. We can't have a market with few players. We need more players to come into the market. So there's more choice and more selection for investors such as yourselves. Right? And then obviously the likes of alternative assets that can provide good inflation hedging, good risk management strategies, such as commodities that we've already spoken about. So I'll stop here, just to give you a taste of all the things that are possible with investment through non-interest instruments. Thank you very much.
Thank you so much indeed, Mr. Ndako Mujindadi. You have really walked us through how we can invest and how we can participate, which of course is investing in the capital market. Coming from Lotus, a capital market player itself, a premier capital market player. And you've highlighted a few considerations that as investors we need to be aware of, we need to take into cognizance if we are to make benefit of the market. Thank you so much. I believe that has been well received. Now we shall be transitioning to the Q&A session. I'm very sure a lot of the audience are waiting. We have close to 17 questions in queue. I'm not sure if the time will permit us to take all of those, but we'll try as much as possible. I'm sure our panelists are willing to provide succinct response, but yet meaningful response to the questions, and I believe that actually they'll do justice to it. But then before we go straight into that, we will like to present the result of the poll that we've been taking all along, and in that sense, we'll have the panelists respond or comment on the results. So far, we've had 6 polls. The first poll was on Islamic financial literacy, and we'll request the WebTV team to show us by way of display or share the screen on the results for the first poll. And I shall invite Mr. Abdulkadir, who has spoken a bit on financial literacy. Perhaps, sir, if you can hear me, would like to know your thoughts with regards to the result. The first poll is about how much do we know on individual capacity, do we know about Islamic finance? And we have 70% claiming to have a fair idea about it. Another 10% do not even know what Islamic finance is. And 21% know very much about Islamic finance. And this is a poll coming from nearly 63 participants or respondents. So, Mr. Abdulkadir, if you can hear me, please shed some light.
Thank you very much, the moderator. Well, I've seen the result, and I think for me, I can say I think it's like a kind of fair assessment. 25% are saying that they understand very much Islamic finance. Am I right?
Yes.
That's
yes,
very the screen. Right. Then 70% have a fair idea. So when you say fair idea, it means somehow I have a kind of idea.
Somewhat understanding.
Yeah, absolutely.
Mr. Abdulkadir, if you can perhaps react to maybe from the SEC side, what should we look for to enhance this understanding, or what you think this understanding really means for you as a regulator who is promoting Islamic finance literacy?
Okay, great. That's why exactly I'm going. So for me as a regulator, for us as a regulator, somebody, I think our concern would be like these guys that said they have fair idea about 70%. How do you really, what kind of strategy can we devise to really make them to be very much conversant about Islamic finance? What kind of program can we put on the table? And how do we target them? What are the kind of target are we looking at? I think these are some of the issues that we're looking at. I remember we have a committee on financial literacy, which is a market-wide committee. And we need to now look at certain aspect or certain segment and come up with a strategy that will be impactful in that regard. So 70% say they have fair idea. Only 10% are saying that they don't even have any idea at all. So a kind of targeted strategy from the SEC's perspective towards those categories of audience. How can we now do we need to have a budget for that, and then how do we go about it? Do we need to start from scratch, trying to now have a kind of pamphlet, have a kind of webinar, like this kind of webinars that we're having, and how do we target it? And then at the end of the day, how do you now ensure that you are able to really achieve that kind of target? How do you have metrics to which you can be able to measure? I think I would just stop there. But I think this is these are some of the takeaways that we need to have, and then go back, think about it, and then have a kind of strategy that will be impactful in my own view. Thank you.
Thank you so much, Mr. Abbas Abdulkadir, and thanks also to the audience for your response. You see, with this feedback, the regulators have something to work with. At least they have an idea what the industry is thinking with regards to Islamic financial literacy. I shall move on to the second question. I'd like that to be displayed very soon, and I shall invite Mr. Tesleem Akosile of Taj Bank to respond to this question. And really, this question is just to ascertain the level of Islamic finance, or shall I say non-interest finance access in the country. And it goes thus, do you have an account with a non-interest bank? And yes, we have nearly 2/3 of the respondents saying they do not have an account with a non-interest bank. Only about 1/3, 35%, have an account with a non-interest bank. And I understand so far we have 3 non-interest banks in the country and 2 Islamic banking windows. Maybe one of them is yet to be fully operational. But then, Mr. Tesleem, how do you respond to this coming from Taj Bank?
Thank you, Dr. Mustapha, for this. This is understandable in view of when you bring side by side the number of the conventional banks size and the number of the Islamic financial institutions and their size. So this is understandable, and I can say this result or this figure is not absolutely bad, but there are a lot of, it simply shows that the Islamic financial institutions need to do a lot more in the area of awareness and further activities to achieve effective penetration. That said, if I'm permitted to bend backwards towards the first poll, that's on the Islamic finance education or literacy, I think the reality is that we might need to start working with the educational authorities to start considering reviewing our curriculum to include Islamic finance education, starting from the secondary school level to the tertiary education level, and not limit it to just webinars, because webinars is limited to those that are interested and have the access to it. Thank you.
Thank you so much. Really, that was succinct and to the point. Yes, we need to go beyond the webinar, why that is going on. It also shows there's a lot of room or a lot of areas that the non-interest financial institutions need to work on in sensitizing people, in increasing Islamic financial inclusion through access. And up next, I'd like the third poll to be up, the result of the third poll to be up, and I'd be inviting Mrs. Uzor-Kalu to respond in this case. Really, it says, apart from the road infrastructure, which you highlighted, the infrastructure deficit, what other sectors can Sukuk support in the debt market? Now, this is a multi-choice question, but you see 70% people believe in healthcare sector, 78%, yeah, actually 78%, about 50 out of 64 went for power infrastructure. Yes, Nigeria surely does need a lot of investment in that sector, and also sustainable environment. So how do you react to this coming from the FMDQ group?
So one thing that FMDQ is championing is a lot of market education and a lot of financing towards infrastructure. The plethora of infrastructure issues in Nigeria is just so large. And so all these sectors, we can leverage Islamic finance for all these sectors. I think they're very much sectors that are, for the social good. There are sectors that need attention because infrastructure is crying for attention from capital market participants. So, but to add to this, power, sustainable environment, which is the environment, education, health, housing is also very critical. So as much as, which is permissible as well. So as much as these sectors are there, I think that all the sectors, power and include housing to that. Of course, road infrastructure is receiving some attention now, but all of the sectors they mentioned are very, very crucial for economic development. And I just wanted to add housing to that both on the buy side and the sell side. So both on the construction side and also on the housing finance. So halal mortgage, not the other conventional mortgage. So this is very, very critical. And FMDQ
Thank you.
To push that. And can I just mention, for the poll that Mr. Abbas actually answered as well. You know, Zoom is here to stay. So the virtual technology is here to stay, and having virtual engagements is easy and affordable for a lot of people. And when you see that 70% of the people on this webinar don't have the awareness or the knowledge, one thing that FMDQ as a financial market infrastructure, mostly in Holdco, one thing we're doing is a lot of market education. Again, not just alone, we collaborate with the experts. So just the way that we're pushing the green bond financing and sustainable finance, Marble Capital and others know what we do in the green bond space. It's taking 3 years just to get the awareness, just to get people to know that there's something called green financing and green bonds. Likewise, we can just use this framework where we need to spend a lot of time communicating and having conversations with both the issuers, potential issuers, and preparing them to market. There's a lot of opportunity for having these conversations. Yes, it's expensive to set up a school or set up let me say a university purely for Islamic finance, and there are other clients that have done this, so that would take time. But for the quick wins, let's use this virtual forum or even personal meetings now that COVID-19 is settling a little bit, to engage and create this awareness. So just my little 2 cents in terms of market education and capacity building is one thing that FMDQ is very dear to the FMDQ family. Thank you.
Thank you. That's very much noted. You've highlighted actually 2 things. You first agree with the poll results that infrastructure seems to be very critical to Nigerians from the area of infrastructure deficit that have been highlighted here. And also you've touched on the need for Islamic financial literacy and leveraging the Zoomification that the pandemic has brought, if that word can stand. Yes. Okay, that is wonderful. We shall move on to the third poll results now, and that will be taken by Mr. Akeem Oyewale of Marble Capital. And this particular question really it's to gauge the interest really in non-interest financial products and services. So it says, would you prefer to invest in a non-interest finance product or service or a conventional product? Now, 82% go for non-interest product services, and 80% goes for the conventional products. And let's put a caveat, right? We assume that predominantly the participants in this particular will be some interest in Islamic, but non-interest financial services. So that may bring about some biases in the book, but nevertheless does communicate, and I'd like to here with us.
Okay, thank you much. So Mustapha, yes, I mean, thing we need to do, is here that even though we have a basis, I don't know if you can hear me. Yeah.
Yes, I can. Yes.
Okay, cool. Yeah, even though we have a basis of saying that most of the people on this panel, on this webinar, prefer to have Islamic finance instruments, it also means that we can still do more. I mean, there's nothing wrong in having 90% of people here saying they want to invest in non-interest finance. What we can do, which Adaeze and Mr. Abbas highlighted earlier, is to continue that awareness, continue that education process, continue that provision of products, and letting people to be aware that these products exist. When people have as much access to products, whether it's commodities, whether it's mutual funds, and all of those, and they are also aware of the benefits, which especially the usage of Islamic finance products to enhance social good, social welfare. You're going to see a continuous increase in number of people that will continue to say they prefer to have access to non-interest finance products. And I think the federal government has done a very good job in this by looking at the recent sukuks that we've had, the last 3 sovereign sukuks that were used ostensibly to just enhance road infrastructure, not only build the roads, which people have seen that they were actually built or they are being built, but also putting signages saying that this was built with Sukuk 1, Sukuk 2, Sukuk 3. So when people ply these highways and they see the quality of the construction, they can see that some of their money they've invested in Sukuk was actually used to better the life and the economic welfare of the citizens. They will naturally be inclined towards participating more and more in non-interest finance products. So I think it's a good result from the poll, but we can still do more. Thank you.
Thank you so much. Truly, it's a good result, and then we can really do more. Shall I invite Oluwafunto Oluwasemo for the 4th poll? And this poll result, if the team can bring it up. Do we have the poll result of it? Yes. Now, this is actually with respect to the commodities market. How or what areas can really Islamic finance support commodities market in Nigeria? It's a multi-choice question. And we can see there's a lot of emphasis on supporting farmers. What do you say, Funto?
Thank you very much, and thank for the participants of the poll. I agree with the result of the poll, and if we look at the first 3 results, I can, or the first 2 actually, I will put them together and categorize them as infrastructure needs. So looking at the agri land space in Nigeria, right? We have about 75 or 74 million hectares of arable farmland, and less than 50% of that arable farmland is currently cultivated. And of the less than 50% that is being cultivated, only 2% is being irrigated. And this actually speaks to lack of infrastructure. We are a tropical region, so we won't have rain all year, right? But we have not implemented proper infrastructure that would help production when we do not have rain. So beyond the access to finance or access to market that currently play the agri value chain in Nigeria, there is also a huge infrastructure gap that needs to be fulfilled. And unless we begin to take these challenges very seriously and channel as many funds, Islamic funds, the non-Islamic funds, but again, much more specifically. And a classic example is looking at, say, a sukuk structure kind of financing and see how do we build appropriate infrastructure in key producing states where these commodities are coming from, so that level of production is significantly improved, so that post-harvest losses are significantly reduced, so that we can properly link the producing states and the consuming states. Again, these are usually our 2 extremes of the country. Producing states typically existing for most grains and oilseeds up north, while the factory that converts these commodities into finished products exists down south and west. And there is that infrastructure of logistics. How do you then bring it in from the producing states to the consuming states? So there's a lot that Islamic finance can help in the commodities market vis-a-vis investments in infrastructure to improve productivity, to improve supply chain, of course, continually provide the necessary access to financing and inputs that are required by the producers of this commodity. Thank you very much.
Well, much, Mr. Oluwafunto. There's quite a bit to unpack from your short response, deeply rich, and there are some questions actually that would allude to that. But that's once we're done with the poll, I shall bring up some of this question. Now, in the interest of time, I'd like to have the 4th question up, and that will be taking up the last question, rather, that will be taken up by Mr. Ndako Mujindadi. And okay, it's up already. Really, it's about awareness of, industry awareness about investment opportunity in the Nigerian capital market, non-interest capital markets. So in this case, what do you say? We have nearly 80% being aware of the benefit of investing, and only 20% are not really aware of the benefit of investing. So, Mr. Ndako, what do you say to that?
Okay, and thank you for all those that have been quite honest in their response in participating in this poll, to give us the kind of research material, the kind of data that all of us need for planning and development of the market. So thank you so much for participating in the poll and for organizing the poll. I think for me, the concern is usually around when we have the low numbers. So when you say we have 21% as not being aware of the benefits, that's more of a concern for me, and that's where I think the focus should be on. And part of the ways that that we can, as a collective, ensure that more people are aware of the benefits, the existence, the uniqueness, and all that of Islamic finance products, is by ensuring that we can dimension where people are in their journey in engaging with non-interest finance. So what we've done is to try and break down the evolution of a consumer, right? So there are people that are ignorant, right, as one bucket, and some people that are just aware, and some people that are a bit more aware, they have a better understanding, of the product, but they haven't engaged. And then there are people that understand and then they've engaged. And there are people that have engaged and they've engaged multiple times, they're familiar. And then they have people that are sophisticated, right? So there are about 6 buckets in the evolution of a consumer in engaging with non-interest finance products, right? And that will enable them appreciate both the benefits of the product and the depth, of these products. So I think as market promoters or as market practitioners, what we need to do is have these kind of forums where we have dimensioned the consumer journey and target, programs either to address people that are more ignorant that need to become more aware, people that are aware that need to understand better, people that need to, engage better, people that need to be more familiar, so things like that, and move away from maybe having like a broad engagement and having more targeted engagements, and hopefully we can raise that 20% to, collapse it into the 79% and make it up. And I think this also speaks to the first point where we had about 10% saying they had no idea, or similar percentage that have never invested in a product or have a non-interest bank account. I think the strategies for addressing all those results, and this result can be similar, and we can harness that. Thank you.
Okay, thank you so much. Really, those are interesting insights, response coming from our panelists, from the poll that we've shared. Really thank those who have responded quite honestly. I believe this feedback will serve as actionable insights for players in the industry as well as the regulator in deepening or developing Islamic finance further. Now we'll move on to the question and answer. We do not have much time for that, so we might end up taking selective questions. And just to begin, I have a question here from Musa Sani, who really, he is saying, I'll just read it out straight up, is asking that what level of collaboration and partnership exists between the Securities and Exchange Commission and the Federal Bank, so as to introduce products like diminishing musharaka. Of course, we need what diminishing musharaka is, a very quick partnership, which where one partner diminishes his or her own holding onto the other partner. So in this case, the consumer one on the side of the ship, and we're providing the finance, providing the money, will have more ownership in the holding. And over time, it's just going to be a receipt drop down to the owner or to the consumer. Or so in this case, how do we respond to that? I believe perhaps Mr. Abdulkadir can take this, since it's coming for the SEC and the Federal Monetary Bank.
Okay, thank you very much, Dr. Mustapha, and thanks, Mustapha, for the question. I think my answer to the question is, we're talking about collaboration in terms of just issuing just one instrument. We have been engaging quite a number of stakeholders, right from the time when we started with the master plan. I could remember we have even engaged Federal Mortgage Bank on a number of occasions to be able to even come as an entity to even come with a program for issuances. And this issuance is not just on diminishing musharaka alone, because this one, it will just end up with ownership of the asset with the client, per se. That is just in a nutshell. But in addition to that, any kind of structure, whether it is an ijara scope, Rabaha, or whatever form that is outlined as per our framework, we're always engaging not only Federal Mortgage Bank, other stakeholders as well. And the idea that we're trying to push across is, look, even if you don't intend to issue it now, come and set up a program. Once you have the program on the shelf, it will be there for corporate, it will be there for 3 years. For entities like supranational, subnational and supranational entities, it will be there for life. So set up your program so that by the time when you intend to do the issuance, you can quickly come with your pricing supplement and then come with other supplementary document. Then we'll now give approval, you hit the market. So the whole idea is to really see how we can really engage more issuers, like the Federal Mortgage Bank. I could remember we have had that engagement, but it is continuous collaboration. We still have other planned engagement with the likes of Federal Mortgage Bank as well. And the whole idea is not only just for the issuance, even for in terms of capacity building that I talk about, we try to see how we can collaborate with other stakeholders to see that we really build a kind of platform that issuers and other investors can benefit. Just to answer your question. So we're open for collaboration, Musa. And anytime we're open for discussion, if you are from Mortgage Bank, I think we welcome any idea or any initiative. If you have a proposal, we are ready to really sit down and discuss about it and discuss and agree with the structure.
Okay, thank you so much. Just before you turn off your mic, Mr. Abbas Abdulkadir, there's another question that very much relates to that, and this is coming from Bashir Yusuf. He's asking specifically what is being done to support early stage Islamic fintech startups by the SCEC.
Right. Yes. We have a framework that we call Regulatory Incubation Framework. And the whole idea about setting up that framework is to allow for any startup, whether it is an Islamic startup or any other conventional startups, to come with an idea and put it just similar to what we have in the sandbox. And the whole idea is to put it there, and then we will now be able to now mirror or to witness or to observe, how that structure performs before we eventually now come to the formal stuff and give it a formal approval. So we have that framework, and it can now cover either Islamic startup or any other kind of startup. So we try to create a kind of level playing field in that respect. Mr. Chairman, moderator, if you can allow me, I will touch on the other question that is related to that on crowdfunding for Islamic startups.
Okay.
I think it's related. Let me just answer it. It's the same way we have the framework on crowdfunding, and we have the application forms on our website. And what we are trying to do is to now open up a window so that SMEs, if you have Sharia compliant idea too, as SME, you can leverage on that framework and then come and register via the crowdfunding route. So we have that one as well. So for any kind of issuer or interested participant, you can leverage on that window to now come and tap money from the capital market in a more formalized way. And we have a target of the amount that you can be able to raise per round. So all those have been provided in the framework. I would encourage us to visit our website to see those kind of specific new initiatives that we have in place. And if there are other issues, I think we're open for more discussion. Thank you.
Okay, thank you so much. I was about to even pull up that question by Adedayo Adebayo. Now, this is another question from the same person, Adedayo Adebayo, which I would like to invite Mr. Akeem. Actually, it's directed to Mr. Akeem of Marble Capital. which really is about oversubscription. So he says oversubscription is good. It's good news as it indicates investors' acceptance and appetite. But he would like to ask what happens to the extra. He asks what happened to the extra cash since the offering is set on a budget. How would you respond to that very quickly?
Thank you very much, Mr. Adebayo. Yes, I mean, oversubscription is a good result. It means that investors actually agree that the instrument being brought forward is actually a good one. So that's a good one. Now, when you say that oversubscription, what do you do with the extra cash? In most instances for Islamic investments, such extra cash is returned back, to the investors. I mean, except if there is a gap or there is an opportunity that has been well cleared ahead of time, that the transaction could actually be expanded, and so it has an elastic window. Let me say, an example would be the last sovereign sukuk that was issued. We had oversubscription or subscription in excess of 700 billion naira. The government going out for just 150 billion, and eventually the excess amount that was taken was just about 15 million. I think about 165, if my figures are right. So for that additional 15 million to have been accepted, 15 billion to have been accepted out of a figure of about 600 or close to 600 billion, it shows that 15 billion, there's a provision in the documentation that allows that the transaction can actually absorb that. But what you do not see in most instances in Islamic investments, because like you rightly said, they are just for some specific assets, which you will have had costs, assigned to. It's not just that you are raising money just for the sake of raising money. So that additional amount being taken from the oversubscription must have been assigned to particular projects as well, and that is really the benefit of Islamic investment. So you do not just have cash going everywhere or anywhere just because investors are buying into your idea. If there's oversubscription that is not allowed, then you return the money back and you only take just the maximum allowed by the initial transaction you intend to execute. Thank you.
Okay, thank you so much for that response. But just very quickly, in addition to that, there's a question from Kazim Adebumiti. What are the prospects of corporate sukuk issuance in the country? It appears that the pool is majorly coming from sovereign issuances.
Thank you very much, Mr. Kazim Adebumiti. Yeah, I mean, it is true that at the moment, what we've seen, especially in public issuances, have been the government, sovereign sukuk by the government, either the subnational Osun State or the three we've seen from the federal government of Nigeria. But just like Mr. Abbas of the SEC mentioned earlier, the initial drive was to ensure that there is a sovereign benchmark, that's been established, and that has been done. So investors now understand that this is the way sukuks work. I mean, this is the kind of returns you get. This is how it is being done. We've seen in the last couple of months as well, a number of private corporate sukuks being issued. And like Mr. Abbas also mentioned, there are some still being reviewed by the SEC, which we expect to be getting to the market very soon. From the private side, we've seen a number of corporate issuances coming up, but we also expect that there will be a lot more corporates that will be coming up in the public side as well, especially for folks in real estate. I mentioned in my presentation the private issuance that is solely in the energy sector, so we expect a lot of corporates to be taking advantage of the benefits of issuing sukuks in Nigeria, and investors will actually like corporate issuances, especially the pension funds, once the Fund 6 is approved and is live, because corporate issuances are likely to be more dynamic, in terms of the kind of areas they're going to service, whether it's going to be in the healthcare sector, whether it's going to be the real estate sector, whether it's going to be, there could be a lot more dynamism, and that will meet the needs of the various investor profiles. And that's what we're going to see in the corporate issuances that we expect to continue in the public space in the near future. So please watch this space and continue to speak with your fund managers, and they'll be able to let you know what's going on. Thank you.
Okay, thank you so much. Quite detailed response to that There are questions, so we look forward. Really, we have to keep watching the space, following the market, following the news. There should be some events happening soon. Now, this question I'd like to direct to Funto. This is about AFEX presentation, which the respondent, anonymous attendee, considered to be absolutely mind-blowing. Now, the question is, how does their commodity trading different from what a lot of agrotech firms like Agrovest, AgroPartnership, etc., are currently engaged in?
Okay, thank you very much for the question. One key difference, I will start from a regulatory perspective, is the fact that FX is a commodities exchange licensed by the Securities and Exchange Commission. And similar to how you would have your Nigerian Stock Exchange or your FMDQ platform, but albeit our own license permits us to make commodities trading available. Having established that, one key difference between what we do and what the Agrovest and the likes of them do is that the agro fintech or agrotech companies, they are actually what you call the crowdfunding platforms. But at AFEX, our instruments are securitized instruments, standardized contracts that are traded on the exchange, and they have trading rules that guides them. Things like what the price movements, the up and down price movements would be on a typical trading day. Things like what the size or the ticket size of a fixed instrument would be like. So the instrument traded on our platform are standardized, they are standardized securitized commodities platform, unlike what you have in the Agrovest and the rest of them, which are largely just crowdfunding platforms to pull money together and then maybe form a farm project or fund an aggregator who is looking at delivering offtake contracts.
Okay, thank you. I think in addition to that, just if I can wrap up this other question directed to you. And this person, first of all, is commending AFEX for doing a fantastic job. I think we all can acknowledge that. But this person also said, I'll just read out, I've observed that we have a supply-demand mismatch in the agricultural market, which is majorly because by our single season production, while this results in higher investment return is not suitable. Okay, does AFEX have plans for soilless farming, or in other words, that's hydroponics, that sort of farming process, investments to ensure continuous supply and impact on the economy?
Okay, again, thank you very much. Very interesting question. So let me start by referring to the first comment I made, right? That FX Commodities Exchange, we are a commodities exchange and more like a marketplace. So a lot of times there's usually that confusion as to who we are and what we do. Are we an exchange? Are we into the agricultural farming? Are we aggregators or are we traders? And one of the reasons why this whole multi-dimensional responsibility had come to play is because if you look at the commodities landscape in Nigeria, as at today, we 5-10 years ago, we never really had a framework for a viable commodities exchange operation, which meant that at every value of a commodities exchange, who makes the supply of commodities exchange to the market, how are commodities standardized, how do you give guarantee to players that are participating in the market, settlements and clearing. So FX had to into those roles and play those roles at different milestones. And that kind of has made the market think that we are in the business of farming, right? We got to do backward integration with farming to ensure that there's a supply of commodity. At some point in the nearest future, some of these responsibilities will not be on the exchange again, but will be passed to market participants who will then deliver value to the market. Now, having set that record straight, and to answer the mismatch between the supply and demand, honestly, this is very interesting. And I would say that majority of the solution to Nigerian problem is very simple, right? So soilless farming is another level. Remember, I did provide the statistics about the amount of arable farmland that we have, right? We have 74 million hectares of farmland. Half of that is being cultivated. And of the half that is being cultivated, just 2% are being irrigated. So imagine if level of irrigation goes from 2% to 5% to 10% and potentially to 20%. Imagine what that would do to this production and the supply and demand dynamics within the agri value chain. Again, let's also not lose focus that if we look at the producers of agri-commodities in Nigeria, which are largely the farmers, Nigeria is what it is being categorized as a small farming ecosystem, right? More than 90% of the food production that we currently have in Nigeria are produced by smallholder farmers that don't have more than 2 to 3 hectares of farmland. So when you begin to go to soilless agriculture, is this implementable to a farmer that is in Saminaka or in Kaduna, right? So for me, I think that yes, it is important to advance agriculture vis-a-vis technology advancements and the rest of them. But at the stage that we are in, there are very simple solutions to addressing the demand-supply mismatch. And this is where, again, instruments for Islamic financing to address infrastructure that will talk about how do we improve irrigation from the just 2% and have a roadmap to say, okay, over the next 5 to 10 years, we want to develop Islamic financing that would address this irrigation problem and say we want to go from 2% to 5% to 10% to 50%. And then without doing anything additional, we will see how production will drastically increase. And potentially, we will be able to have more than one cropping season for most of these commodities. Thank you.
Wow, thank you so much, Oluwafunto Oluwasemo. Really, it's a passionate response meeting interesting question. And I share your passion, and I think you're right. A lot, Islamic finance has a lot of value proposition in delivering infrastructure that would sort of support agricultural development in Nigeria as a whole. My next question really will go for Mrs. Uzor-Kalu. And really this is also coming from an anonymous attendee, but then it comes across as an interesting question. This person wants to know the level of activity or turnover for the private sukuk market on FMDQ in terms of frequency of activity or issues as well. So you can just give us a quick response on that. Thank you.
A very good question from a very inquisitive individual. So Mr. or Ms. Anonymous, FMDQ private markets is, as it says, private. The investors on that platform are private. There are activities to key sectors of the economy, renewable energy predominantly, but we can't really divulge much about that activity on this forum. But there are quite a lot of activities, but it is private markets, and so we can't really make that information public. Thank you.
Okay, so shall I advise this anonymous attendee
to reach out? Oh yes, definitely, definitely. But like I did say, and just to support Marble Capital, there are quite a few activities, mostly for limited companies, MSMEs. A lot of activities pushing for key sectors of the economy. But please reach out to us, and then we can have a private conversation on what is happening in the private placement sector. Thank you.
Thank you. One other question, and this one I'm passing it on to Mr. Ndako, Mujindadi. And this one actually also comes first with a commendation from Mr. Adebayo. He says, thank you for your presentation, Mr. Ndako. More power to Lotus Capital, pioneering efforts in this space. What is the role for digital agency in retail investment and education? And then he went on to explain and then put on another question, but I think you should just take the first one. Or perhaps if you can see the question on the screen as well, you might want to take the whole part.
All right, thank you very much, Mr. Adebayo, for the question. So I think it's important to understand that for the penetration of investment product, the services of agents is quite critical. It's important to also understand that digital infrastructure is also very useful in enhancing the penetration of products. And this is all types of products, whether they are the fixed income nature, whether they are pooled investment schemes, and whatnot. So there is a very good scope for relationships with digital agencies to enhance that dispersion of products. With that dispersion comes, increased participation, enhanced liquidity for the market. There is a requirement to ensure that whenever you're dealing with agents or agents are assisting in promoting or distributing products, that those agents do understand the intricacies of the product, so they are properly educating investors. And to that extent, there would be requirements for things like training. Many companies, ourselves inclusive, when we're trying to enter into these kind of arrangements, would ensure that the agents have a good grasp, not just of our product, of the general Islamic finance landscape. So there's no mis-selling. So yes, there's good scope for this. If you'd like to be an agent for any institution marketing or distributing their product, you can easily engage them, and they'll let you know what the process is. I hope that's fine.
Yes, I think that serves, and thank you for the swift response. To add to that, could you quickly respond to this question regarding Sukuk coming from Cousin Adebumiti? It's really about how Sukuk can be exploited or perhaps explored to achieve affordable housing in the country. Coming from, you being a capital market player yourself, a pioneering capital market player. Mr. Ndako.
Okay. Right. So it's quite interesting. Thank you so much for the question. I think in the course of our conversation, we had mentioned just how important, as one of the things that the areas for focus, and I think Adaeze mentioned it, in terms of focusing for non-interest finance or for Sukuk, in addition to the likes of power, was housing. So yes, it is quite critical in terms of infrastructure, and Sukuk can play a critical role in this on two levels. So one is in the aggregation of investors to housing projects, and the second is in the aggregation of or the development of those of mortgages for those housing projects. So Mr. Abbas also gave an example of how, in terms of their framework, they have expanded the framework, or they've ensured that their framework can cover things from a contracting structure, be it a cost-plus structure, be it an agency structure, be it a diminishing partnership structure. So that breadth of contracting structures are already or are in the works of being in place with the regulators. So can sit in the middle of that by bringing these two people together, bringing the investors that want to finance the assets together, and also bringing the people that want to access share compliant mortgages together. So it's a critical instrument for addressing housing finance.
Thank you so much. And one other question to Mr. Tesleem. This is also coming from an anonymous attendee, and it's individual. Please, am I audible? Hello? Okay, wonderful. So I was saying these anonymous attendees are posing really interesting questions. They happen to be very, very inquisitive character. So it says, Mr. Tesleem, should Islamic financing products not be less expensive as conventional products, considering its ultimate goal of curing hardship and not causing harm?
Thank you very much for the anonymous attendee for this recurring question. We'll answer it from this way. So when you look at Islamic finance offerings, you can split it into two arms, the business arm and the welfare arm. So the welfare arm takes care of the, so that's why Islamic finance is said to be configured to solve a lot of social issues. So the social arm of Islamic finance, we talk about zakat, talk about sadaqah, we talk about Qard Hasan and the rest of them. And then you have the business arm, where you have the banking subsector, you have the takaful, you have the assets management and the rest of them. So all of these have their intricacies. For the business arm and for the banking subsector, it's further split into two. You have the microfinance bank and you have the commercial bank. So a commercial bank like Taj Bank, Jais Bank, Lotus Bank, Sterling Alternative, SunTrust, among others, are regulated the same way a GT Bank, a Zenith Bank, and Access Bank are regulated. So they are subjected to the same regulatory regime. And by so doing, in the way and manner they operate, it looks more, because they are commercial banks, so they go in that line. Even at that, when it comes to the pricing, which I suppose the anonymous questioner is alluding to, even at that, you see that when we talk about pricing, if, for example, a third bank says my facility pricing is 20%, and an Access Bank says my facility pricing is, my loan pricing is 20%. When you drill down properly, you find out that facility by a third bank, which is 20%, is in actual fact cheaper than that of an Access Bank, which is also 20%. And what do I mean? With a third bank, you don't have the add-ons like administrative charge, these fees, that fees, all of that are not present. So it's actually cheaper. And further on that is that once the facilities from a NIFI, if it is structured on a sale contract, you see that the payment terms there is fixed. It's a sale contract, the bank buys and the bank sells. So the price is locked in and it's predictable. You get to get your payment schedule and it is fixed. It doesn't change. Even if the MPR changes over time, it does not fluctuate. So when you look at this, momentarily it is cheaper, then at the long run, it is also predictable and cheap. It's not subjected to fluctuations or changes as the interest rate spikes or fluctuates with time. So in all of that, it's actually Islamic finance offerings are actually cheap, but in the short term, we think they are costly, but in the long run, they are actually cheaper. Thank you.
Thank you so much indeed. Now we have a clearer picture, clearer understanding in the Islamic finance and capital market in Nigeria, as far as the theme of this webinar is concerned. And with this, we come to the close of this session. We encourage everyone to stay behind. The giveaway is already at hindsight. We just need to wait for Mrs. Bukola to hand that over to us as she does with Islamic Finance Weekly. Now, before we put this to close, I'd like to invite each of our panelists and the order of presentation to give a final remark with regards to the discussion and the entire webinar, the webinar theme, Islamic finance and the capital market in Nigeria. So if I may begin with Mr. Abdulkadir, Mr. Abbas Abdulkadir, please, and then we'll follow the order of presentation. Thank you.
Thank you very much, Dr. Mustapha. I think from us, from the SEC, I can say it is really an opportunity for us to be in this discourse. and let's keep the conversation going. I think what we need to do as a key takeaway for me is to see how we can really be able to continue this kind of collaboration, to see how we can really defend this market further. We can still have offline conversation, but please, let's maintain the momentum and let's see how we can really be able to make our market a market of choice. Thank you very much.
Thank you. Thank you so much. Mr. Tesleem?
For us at Taj Bank, we are delighted to be part of this, and we can be assured of our continued support and cooperation in furthering the Islamic finance literacy, capacity development, and industry penetration. Thank you.
Thank you so much. Thank you for that. Mrs. Uzor-Kalu?
And from us at FMDQ, we thank you for giving us this platform to share our thoughts on market development. One thing that we are keen about is market development to deepen the Nigerian capital market. We are unapologetic about our drive, about championing the development of the capital market, and Islamic finance is necessary. I suggest and I urge everyone to leverage it because it's sustainable, very much in line with what we're pushing, very much in line with our agenda. And let's keep up the conversation. Let's continue to have communication. Let's continue to collaborate. Thank you very much for having us. Thank you.
You're most welcome. You're most welcome. Mr. Akeem?
Thank you very much, WebTV, for actually bringing this together. From Marble Capital, we would like to assure the whole market of our continued presence, for the long haul in ensuring that the Islamic capital market is deepened. There are a lot of products that are appealing to all investors. So long as the products are ethical, they are Islamic, they are Sharia compliant, you find them on our tables. And we would like to support the continued capacity building, both in the industry and the awareness in the market as a whole. Once again, thank you for this opportunity.
Thank you. And Oluwafunto?
Yeah, it's been great 3.5 hours thereabouts spent on the platform. And I want to say thank you to all the audience. Again, we cannot overemphasize the importance of Islamic financing and their participation within the commodities market. In terms of collaboration, in terms of innovative creation of products that have ethical variants to it. And I also want to use this opportunity to thank Marble Capital and Lotus Capital. They are actually two ethical firms that are participants and members of the AFEX Commodities Exchange, and they're strongly driving the creation and availability of ethical-based commodity funds to the market. So thank you, everyone. And again, just as everybody have said, let's keep the conversation going. Thank you.
Thank you. Thank you, Oluwafunto. Mr. Ndako, Mujindadi.
Right. So again, thank you from us at Lotus Capital, from me as well. It's been a fantastic engagement. I'd like to thank Proshare WebTV for putting this together, for creating this kind of platform, and for identifying market leaders to come and speak to the developments in the market and the opportunities in this market. For all of those that have participated and stayed on till this time, 3 hours is quite some time. So kudos to all of you that have stayed on. It's a testament to your interest. It's also a testament to all the great speakers that have shared their deliveries today. What I'd like to say is that for those who are not aware about non-interest finance, today you're aware, so take some action. For those who were aware but haven't invested in any product, please go ahead and open an account or invest in a product. For those who are very interested in the development of the industry, make a suggestion, engage with us as much as you can. We are very willing to listen. We're very willing to bring products that satisfy your needs as much as possible. So please, by all means, spread the gospel. So thank you.
Thank you really very much, everyone. Just before we close, shall I invite the panelists for a group photo shot? Normally we would do this with the paparazzi and all, but since we're having it on a virtual space, we're just going to take screenshot and that would do. So please turn on your camera. Yes, this is the new normal. So do we have everyone's camera on?
Okay.
Okay, Mrs. Bukola, would you take the shot and notify us once you've done that? And I'd really encourage everyone to wear a bright smile. We want to want to keep this really cool and nice. Okay, Ms. Bukola, on to you.
Right. Yes.
We're good?
Dr.
Okay, thank you.
For moderating the session. There's been a, yes, yeah. Thank you very much, Dr. Mustapha, for moderating this session. It has been an interesting webinar from the keynote speaker to our esteemed discussants. So now I would like to introduce one of our sponsors, NASFAT, Mr. Adeeze Abdulwahid, who is the Vice President of NASFAT, give a short presentation.
Yeah, I say good afternoon already to everybody. And I greet you in the most perfect way of greeting by saying, may the peace of Almighty God be with every one of us. Why are we engaging in this? On behalf of my president, Mr. Ney Yusuf, I'm actually representing him. Why are we engaging in this? Why do we decide to sponsor? Why do we decide to support this kind of project? Because of our belief. First, NASFAT is an enlightened Muslim society, and we have a lot of professionals in it, a lot of professionals in various fields. But it's of concern to us, this Islamic finance, because most, when you talk about what you need to develop the market, we've got it. We've got it in that society with close to about 360 locations across the globe. We've got the market that will support what you intend to do. And also we have the woman capacity that will support what the market requires. That is about Islamic capital market or the Islamic finance in general. And not in the recent times, we have Malaysia Security Commission appointing our head of spiritual, that's our chief missioner, a registered foreign advisor in Sharia compliance. So that shows that we have what it takes to be part of this kind of platform. And also, we are ready. We are open to a collaboration and engagement. And we're not new to this. When Jaiz Bank came to the market for the first time, our members really subscribed massively to Jaiz Bank. And in the recent times, we launched an ethical online apps. And NASFAT really sponsors such apps because we are interested in the market. And recently, we indirectly be part of Lotus Bank when they were arranging to come back to the market, to come out and get registered. And that stands some of our tests. However, we have listened perfectly, attentively, because I would say, Proshare, you are a trailblazers. You've done it perfectly today. We have listened to all panelists, and all in all, we can see that promotion of social economic justice through redistribution of wealth is one of the most salient features of Islamic economic system. And that Islam financial institution knows that Islamic banks are used to implement this in practice under the guidelines of Islamic Sharia law, which has been well explained. However, for record, we use what is called Qasri Hassana in our branch in Manchester to have that Islamic Development Center there. And that still stands a variant of what we are talking about today. That is an impactful and socially impactful project that we have in Manchester and the whole of UK. We want to have many of such in Nigeria if we have collaborations from people, the operators, the regulators, and they give us the recognition that we require to be part of this development. From what we have listened to, Islamic finance is poised to play a significant role in addressing the financing gap in global infrastructural needs. Despite the relative small share of the global financial market, the global Islamic finance market is growing moderately because of the strong investment in the land sector, infrastructure, and Sukuk bonds, especially through electronic modes and in other products and services. The factors driving the growth of the Islamic finance market are directing investing toward the tremendous growth opportunity in the promising Islamic sector. The industry total worth, according to key industry stakeholder, is getting close to about 2.05 trillion as of 2017. and it will still continue to grow. However, our interest as a society is so clear and one that to be known to people. We're interested in socially impactful projects. We have a program we call Health Education Dawa. This program that we call Health Education, Livelihood and Dawa require the support of these regulators, require the support of the operators, because our people are ready to be part and share, because that's where the market is. And like I said, NASFAT has one thing. NASFAT has the market for you to tap from. NASFAT has scholars that are ready, that they got the human capacity to give support to this market. And NASFAT can also support the developments of some of the products, as I've heard from our various panelists today. And we are ready, open for collaborations and engagement. And we hope these opportunities will be tapped into. What are the windows available at NASFAT at the moment? In NASFAT, we have infrastructural deficit in some of our projects. We have in Fountain University, where our university requires commercial malls, it requires hostels, it requires infrastructural development such as independent power supply, hostel facilities, health centers. This can be supported with your, this can be backed up with your support. Guest houses, we require a library, cafeteria. We have lands in over 250 locations across the Federation for a cultural project to be supported by AFEX when they are ready to join us. We have land that we're ready to give to manufacturing companies for development of hospitals, school project and vocational center, and housing development. Thank you. God bless you. And we really, really, really felt so good to be part of this.
The proprietor, Nasrullah Youth Society, NASFAT, established Fountain University, Oshogbo. Welcome to our campus.
Who are we? We are a family born by a common idea that is changing the world. We are Fountain University. We lead and others follow.
Enroll now for 2020-2021 undergraduate and postgraduate admissions into College of Natural and Applied Sciences, College of Management and Social Sciences, as well as College of Basic Medical Health Sciences and College of Law through UTFE, MBAIS, JUPEB, and Direct Entry. For further inquiries, visit www.fuo.edu.ng or call 003-114-5929 or 003-706-3960.
Fountain University.
Faith, knowledge, and service.
The proprietor, Nasrullah Youth Society, NASFAT, established Fountain University, Oshogbo.
All right. Thank you so much, Mr. Adaeze, for that wonderful expressions with regards to NASFAT, giving us an insight into what NASFAT stands for and how NASFAT can be engaged with the industry. I think that is really wonderful. Majority of the players here show up hard and will be showing interest in the nearest future. With this, I'd like to sign off. It's been 3 hours of interesting discussion, 3 hours that appears like 13 minutes, which shows both on one side, the capacity, the thought leadership that we were talking about when it comes to the market players contributing. Every breath of their presence here has exhibited a significant level of knowledge, which has enlightened us as an industry, or no, as participants rather. And at the other side, we have engaging participants who have responded to polls, and their polls have provided insights which we believe are actionable. I'm not sure whose screen is displaying. We can see some Excel sheets moving around. We'd appreciate if it's my face that is being displayed, rather than the Excel sheet. But to point, I'd like to thank everyone for participating, most importantly, our keynote speaker and our distinguished panelists who have, taken out of their own time to share with us what we do not know or what we knew less about Islamic finance and capital markets in Nigeria. And in my humble self, I hope to be engaged. I can be reached out to on LinkedIn. You just need to search Mustapha, Akinlaso, Mustapha Ishaq Akinlaso on LinkedIn at any point in time, or reach out to Mrs. Bukola. And I'm happy to hold conversations regarding Islamic finance, financial econometrics, and digital innovation. Thank you, WebTV, for organizing this, bringing together thought leaders, identifying first, and then bringing them together on this platform. Is not an easy task, and it's something that is done unprecedented, and one which we haven't seen the lights in the market. So I'd like to thank you all once again for your time, and thank WebTV for organizing this. With this, I will sign off. Thank you.
But now it's time for, as I said here in my welcome, and I'll be treating 2 lucky winners to invest in Islamic finance products. So we have our Excel sheet showing 46 people on the phone. So now we have to choose randomly by using a selection process on Excel. Okay, so we are matching the numbers now. So we have Mr. Ndako. Mr. Ndako, are you there?
Yes, I am. Please go ahead.
Okay. So we need you to count down from 1 to 3.
Count from 1 to 3?
Yes.
Right now?
Trying
Okay.
to match the name of the person.
Okay. 1, 2, 3.
Okay, Mr. Nuruddin Mohammed. No. We have Summit Govin Shaka. Congratulations, Mr. Summit Shama. Can you please say hi, Mr. Govin Shama? Are you there? All right, just 100,000 naira. So now to the second lucky winner. I would like to call Mr. Akeem. Mr. Akeem Oyewale.
Okay, I'm here.
All right. Please count down from 1 to 3.
1, 2, 3.
Okay. We have Oluwafunto Oni. As the second lucky winner. Oh, she's here. Congratulations to you, Oluwafunto. Just won 5,000 naira to invest in the Marble Capital Limited project. Thank you very much. And that will be all for the giveaway.
I want to thank the keynote speaker, Mr. Abdulkadir Abbas, Head Security and Investment Services, Securities and Exchange Commission, Nigeria. Did a great job as the keynote speaker, and as seasoned faculty of experts that served as discussants. We were supposed to have Mrs. Toyin Sanisi, Emerging Africa Capital Group, who is also the chairman of the SEC Financial Literacy Technical Committee. We hope to have her in subsequent editions. But it was nice to have, representing Mr. Novadilizan Abdurrahman, CEO of Taj Bank, Mr. Tesleem Akosile, the team lead Sharia non-compliant risk for Taj Bank. Very nice insights you shared today. Also, Mr. Akeem Oyewale, CEO of Marble Capital, a guru in the market. Thank you very much for doing insightful contributions today. This is Adaeze, Uzor-Kalu, Head External Affairs of FMDQ. Thank you very much for your Shemo, Vice President, Financial Market, AFEX. Thank you for being part of the discussions that created enlightenment around the commodities market and opportunities for the non-interest finance market. And Mr. Ndako Mujindadi, Head Investment and Research, Lotus Capital. Of course, you know that Lotus has been pioneering a lot of things. And thank you once again for this insight you shared. We did a maestro job today, serving as the moderator platform today to participate in Islamic finance and the nexus with the capital markets. We are grateful to our sponsors, WebTV, Proshare, and NASFAT, whose support made this event a huge success. And personally, for me, it's gratifying to note that we had over 120 participants in our Maiden webinar, staying through these 3 hours, and want to thank you all joining, sending your questions, and participating through your suggestions and views. I'd like you to watch out for more updates on activities and coverage of the non-interest finance market by following our website, www.proshareng.com. Also follow us across our social media platforms. For WebTV, go to WebTV Nigeria on Instagram, WebTV NG on Facebook, and LinkedIn and YouTube. For Proshare, you go on Proshare NG on Instagram and Facebook, and Proshare Nigeria on LinkedIn. Once again, thank you to everyone, and please this period, stay safe.
Tune in to WebTV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch WebTV. Same news, different perspective.